Hey folks, welcome you all to a new video. This is CA Ganesh Bharadwaj. Now in this video, we are going to discuss the Jan 2025 RTP of Paper 4 Cost and Management Accounting. Now before we get into the RTP discussion, I want you all to understand that RTP is a very important source of preparation for your exams. Especially that attempt's RTP is very important for that particular attempt. At least if you're about 1 or 2 weeks away from your exams, it is a must for you to visit RTP for a simple reason that RTP has a compilation of all the questions from every single chapter. That is one reason why RTP is important. And the second reason is I've seen attempts where they lift the question directly from the RTP and it gets tested in your exam. So this is the reason why RTP has such a very important coverage or weightage, especially if you're just about a week or 2 weeks away from your exam. And that is the reason why I'm coming up with this video at this point of time. Right now, in your Jan 25 attempts RTP, for your costing paper, now if you see, there are a total of 19 questions. There are a total of 19 questions, out of which 7 questions are MCQ based, case study based MCQ questions, 11 numerical descriptive problems, and there is 1 theory question. And even in the 7 numerical problem, if you see, there are 2 comprehensive MCQs. I mean, the 7 MCQs, if you see, there are 2 comprehensive MCQs and 5 single MCQs. By comprehensive MCQ, I mean that from a single case study, there are 5 different MCQ questions that they ask for with 4 options under each of the questions that you need to do. But a single MCQ basically is from a single passage or from a single question, that is from a single case study, they ask only 1 MCQ. This is what I mean by a comprehensive MCQ and a single MCQ. And in your exam, in your main exam, you'll be having 2 comprehensive MCQs carrying 10 mark each and 5 single MCQs each carrying 2 marks, right? This is how it generally gets tested. But in this RTP, it has a very good collection of MCQs, numerical problem, as well as 1 theory question. This is the overall big picture of this particular Jan 2025 attempts RTP. And in this video, we will be discussing the RTP in full detail, right? I will be reading the questions. I'll be sharing with you the thought process behind the solution. Every single thing we will be discussing in depth. Are you clear with this? So on that note, let us get started with the RTP of Jan 2025 attempt for costing. Now let's take the first part, which is case study based MCQs, right? So I'm going in the same numerical order. So first, there's one question that's from marginal costing. Ideally, they are saying this actually, they are classifying this question under marginal costing, but I would I wouldn't call this as purely from marginal costing. You will understand as we get into the numerical, as we get into the question. Now, there is one strategy that I generally follow with respect to case study based MCQs. It's a time tested approach that saves a lot of your time. Now, what you need to do is don't read this entire question first. You directly jump and see what they are asking in the MCQ component. Okay, so how will we be able to attempt the MCQ without reading it? I'm not asking you to not read it all. You first read this so that you will understand what they are asking. And then when you're reading the passage, what you will be able to do is you will be looking for these aspects in the question. So it saves a lot of time. Just imagine if you were to read this entire case study once and then go to the question. Once you are trying to attempt the question, once again, you will come back to the case study and look for these things. Rather, if you first start with the questions at the time of reading the case study, you will look for these details inside the case study. Now, this will be able to help you. This will help you to save a lot of time in your exam. So first, what have they asked? The first MCQ, the first question is that what is the allocated fixed cost per unit of school bags, water bottle, geometry box? No, you might not know everything. Okay, so there are some 3 products the company deals in. They are asking for some fixed cost per unit. Fine. Let's go to the next question. If the prices were set at 200, 160 and 100 rupees, what would be the overall break-even point in units in relation to the fixed cost allocated? So which means in this case, they are actually having 3 products. They are giving you some selling price detail and all, asking for break-even point. So this is something to do with the sales mix, right? So you need to calculate the weighted contribution per unit and arrive at something. To this extent, you will know. You might not know every single detail. You will not be able to answer, but you at least know what they are asking for. So at the time of reading the case study, you will look for these facts. This is all I'm trying to say. Next, find out the maximum number of units of each article that can be given at the prices given in part 3. Okay, fine. So this is relating to your second part of the question. Fine, let's go to the fourth one. What will be the maximum units that can be supplied to the schools of each article? So they are asking for some maximum number of units. Maybe if we read the question, we'll be understanding more, we'll be getting more understanding about this part. Then what should be the correct price for each item as per the management's decision? Okay, so basically they are asking for some, there are multiple products, and with respect to that, they are asking for some fixed cost per unit, contribution and all that. So looks like there is some sales mix involved here, multi-product and all. This is what it is. Fine. Very basic level of understanding we got. We don't know any other aspect of this sum. Now let's get into the case study, read it in detail, so that at the time of reading itself, you will be able to connect the dots. This is how it will be able to help us. Now, a popular company produces various articles for students' purposes. It has been in the industry for the last 25 years. The company had a very humble start, but gained popularity over the years due to excellent quality products, which were sold at very competitive prices. The company has huge reserves and feel it is also obligated to give back to the society from which it has grown. So some first paragraph is ideally a context which is not required at all. Last year, the management decided to produce and supply special quality school bags, water bottles and geometry boxes to NGOs. There are 3 products the company deals in. So they decided to supply some special quality school bags, water bottle and geometry boxes to NGOs at no price at all, which means free of cost they are giving as a social responsibility. These articles were simple looking but were more durable, that would not have worn off easily and could have been used for long term. Fine. This year, the management wants to add another dimension to this social work. It approached charitable schools and government-run schools and offered them to supply the same articles at cost. Okay, underline this. So now what they are trying to do this year as a part of their social responsibility, what they want to do. So last year they were supplying to NGOs free of cost. This year, as a part of social responsibility, they are going to approach some schools, and to these schools, what they are doing is the same 3 products that they are dealing in, they are going to supply it, but what? At cost. Meaning what? No profit, no loss. They want to only recover the cost. Whatever is the actual cost, they want to charge from the schools. This is what they are asking. This will help the students in these schools to get these things at a very low price compared to the market. Fine. This is once again a social responsibility measure that the company wants to do. The variable costs are 100 rupees, 80 rupees and 40 rupees for the school bags, water bottles and geometry boxes respectively, right? And these articles are made using a single machine. All the 3 products are made from a common machine, and 0.2 hours of machine operation is required for manufacturing 1 unit of school bag. So the company has 3 products. What are they? School bag, then they have a water bottle, and then they have geometry boxes, right? Now, if you look at the machine hours required per unit of school bag, they have said it is 0.2 machine hours, right? 0.2 hours. Then for manufacturing, similarly, for manufacturing 1 unit of water bottle, they require how many hours? 0.15 hours. And for 1 unit of geometry box, they require how many hours? 0.10 hours. Are you clear with this? This is what they have mentioned. Further, let's go further. And once again, the variable cost per unit is also given. For school bag, it's going to be 100 rupees per unit. For water bottle, 80 rupees per unit. And geometry boxes, it's 40 rupees per unit. We're just collecting all the data. The next one. The fixed overhead related to the machine is going to be 7,40,000 per year. So with respect to this particular machine, the overall fixed overheads is going to be how much? 7.4 lakhs. And the machine can operate for 8,000 hours in a year, right? So overall, the machine is being run for 8,000 hours, and 7,40,000 rupees is what the overall cost of the machine. Now guys, they had asked, remember, what is going to be, so if you look at the first question they had asked, what is the allocated fixed cost per unit of school bag, water bottle, geometry boxes and all. We can find using this. If you see, the total fixed cost is how much? 7,40,000, right? And this 7,40,000 is a cost that you incur by running this machine for how many hours? 8,000 hours, which means for every hour of machine operation, what is going to be the fixed overhead cost per unit, per hour. So the fixed overhead cost per machine hour is going to be 92.5 rupees. Yes, are you clear with this? Now you have what? Now you have the product wise time consumed. That is product wise, you know how many machine hours it takes. Multiply this 92.5 into 0.2 hours. If you multiply, you will get the overhead cost allocated per unit of school bag. Similarly, 92.5 into 0.15 you will get for water bottle. 92.5 into 0.10 you will get the overhead fixed overhead cost per unit of your geometry box. Are you clear with this? As simple as that. Fine. Now let's go further. This is why I said ideally this question is not a marginal costing question, because in marginal costing you don't have the concept of unitizing or calculating the per unit cost of fixed overheads. Fixed overheads always hits in bulk. Are you clear with this? Right. However, in this question, since in the second part and all they've asked for contribution, I think that is the reason why they have classified this under marginal costing. But in my opinion, it's a mix of marginal costing and absorption costing. That's what I would say. Right? See how they are interlinking multiple concepts and testing. Fine. Anyways, guys, coming back here, the company has decided to sell its 80% capacity production in the markets. The rest is divided amongst the two undergoing social works equally. Very, very important point. Very, very important point. This is the point where many students struggle to understand this question. What is the meaning of this? Now what they are saying is the company has 100% capacity, right? 100% capacity, that is overall capacity the company has. They are saying they are splitting it into two. 80% capacity, they will use the 80% capacity for doing the business, right? For running the business, they will use it. So they will not be looking for social measures. They will not be giving things free of cost or at cost. They will not be doing that. They will be doing it at profit. Now the remaining 20% of whatever capacity is left, they are saying they are going to use this for their social responsibility measures, and that too they are undertaking two social responsibility work. One is that NGO. To that NGO, what are they doing? They are using this 10%, they are giving it free of cost. Okay, they are not charging anything. The other one, they are going to the schools. They are going to the schools. The remaining 10% of the capacity, they are using it to the schools. Here they are planning to supply only at cost. So here free of cost, here at cost. At cost means what? There is no profit that they are planning for. Are you clear with this? Now read this, you will get it. The company has decided to sell its 80% capacity production in the markets. Sell means what? They plan to use this 80% capacity for running their actual business. Without business full-fledged, how can they enter into social responsibility? And out of this balance 20% capacity, they are going to equally use it for the two different social responsibility measures. One is for the NGO, the other one is for the school work. So this is what they have mentioned here. No, look, the NGO thing that they said, look, the NGO at no price, and here to some schools at cost. Are you clear with this? This is how you need to read the question. Now it's slightly difficultly worded. Let's be very, very careful here. Now all the schools request these items in the ratio of 2:3:5. Now this entire question is pertaining to this component alone. Are you clear with this? Now they are actually all the questions of MCQs are pertaining to this particular component of the NGO, the social activity that they are undertaking pertaining to the schools. Now what they are saying, all the schools request these items in the ratio of 2:3:5 as per the demand by the school students. The company wants to set a price for these articles to be offered to the schools, right? The management has a few questions they need to answer to. They assigned the task to their team. The team made rough calculations, but as there were too many people on the team, each came up with different answers. So as a chartered accountant, you have been approached. Understand the case closely, find the correct answers, and help the management to set a price. Set a price for what? Not for their business operations. They are not asking you to set a price for their business operations of 80%. No, not for this NGO, because there is no price here. It's free of cost. They are only asking you, all the 5 MCQs that are given here are pertaining to this social activity of supplying to the schools, the government schools and other schools they were mentioning. No, to that alone they are asking. Are you clear with this? This is how you need to understand the question. Are you clear with this? Now, sir, what is the big issue here, sir? They have said you need to supply it at cost, At cost means what? Full cost, not just the variable cost, right? So you calculate the fixed overhead cost per unit, add the variable cost per unit and do it. Yes, absolutely correct. But in a few questions here, they are giving some assumptions also. Suppose if we are fixing so much of selling price, how many units you should sell to break even and all that, we will be reading it. Now you read the MCQs, you will be able to understand. First, what is the allocated fixed cost per unit of school bags, water bottle and geometry boxes? We can easily find out, right? How will you do that? We know that 7,40,000 rupees is the total fixed cost incurred for this machine, right? And this machine runs for 8,000 hours in total, right? I use this machine for manufacturing all the three products only, right? So 7,40,000 divided by 8,000, how much is that per hour, per machine hour? So I am actually incurring a fixed overhead cost of 92.50. Are you clear with this? Ideally speaking, this is a concept of absorption, because in your marginal costing, you will not unitize it, or you will not try to convert it into per hour or per unit with respect to the fixed component. Fixed component is always fixed. It remains in bulk only. That's why I said this is not a fully marginal costing question, right? So 92.5 rupees is the overhead cost per hour of machine operation. However, 1 unit of school bag requires only 0.2 hours, correct? So what will be the fixed overhead cost per unit of school bag? It is going to be 92.5 into 92.5 into 0.2. How much is that? That is going to be rupees 18.5. Clear with this? It's going to be rupees 18.5. Similarly, per unit of water bottle, how much is that? 92.5 into 0.15. So 92.5 into 0.15, that's going to be how much? Rupees 13.875. Similarly here, 1 unit of geometry box, 92.5 into 0.10, that's going to be rupees 9.25. Are you clear with this? So it's going to be 18.5, 13.875 and 9.25. And if you look at the option, which one gives the right option? It's going to be, I think, option number B, 18.5, 13.875 and 9.25. As simple as that. 2 marks in your pocket. Are you clear with this? That's about it, guys. Next one, what are they asking? If the selling prices were 200 rupees, 160 rupees and 100 rupees, what would be the overall break-even point in units in relation to the fixed cost allocated to these supplies? Now, sir, why are they giving a selling prices here, sir? This is only school supply. School supply, I'm going to supply at cost. No, you forget about all that. That's why they are giving if suppose I am fixing this selling price, what will be the break-even point is all they are asking for. Now, a very, very important understanding that you need to do. Now, they are asking only about the 10% capacity, right? For that 10% capacity level, what is going to be the break-even point? That's why they are asking, calculate the break-even point in relation to the fixed cost allocated to these supplies. These supplies means what? So the fixed cost pertaining to the 10% capacity level, you need to calculate. Are you clear with this? This is exactly what they have done. Look at this. Look at this. Now, overall, what is the total machine hours available? You have a total of 8,000 machine hours available, and out of these 8,000 machine hours, I am allocating only 10% of that towards my supplies to the schools. So basically 8,000 into 10%, 800 machine hours alone is being allocated for what? Is being allocated for your supplies to schools, right? And every hour, every machine hour actually requires a fixed overhead cost of how much? 92.5 rupees. Just now we calculated 7,40,000 divided by 8,000 hours, 92.5. So which means for this 800 hours, what will be the total fixed cost? 74,000 rupees. Are you clear with this? So 74,000 rupees is the fixed cost that is pertaining to your supplies to this particular schools. Are you clear with this? That is the fixed cost that we need to what? That we need to recover. Now, there are 3 products. What are the 3 products? You have school bag, water bottle, geometry boxes. Now we need to calculate the contribution per unit for each of these 3 products. Yes. Now for each of these 3 products, they have given the selling price. They have also given the variable cost. Selling price minus variable cost gives you contribution per unit. For school bag, it is 200 minus 100. So 100 rupees is the contribution per unit. For water bottle, it's going to be 160 minus 80. It's going to be 80 rupees per unit. And similarly, for geometry box, it's going to be 100 minus 40, 60 rupees per unit. So we now have the contribution per unit for each of the products. Yes. Now they have also given in the question what will be the mix. The sales mix is given. Here they have clearly given all the schools will request these items only in the ratio of 2:3:5, right? So we need to calculate the weighted contribution per unit. So how will you do that? Very simple. So it's going to be, so the mix is going to be 2:3:5, right? So for bag, it's going to be how much? 100 into 2 by 10, right? Plus for bottle, it's going to be 80 into 3 by 10, plus for your geometry box, it's going to be how much? It's going to be 60 into 5 by 10. Correct? This is how we calculate the weighted contribution per unit. It's also known as composite contribution per unit, right? So this is exactly what they have done. 100 into 2 by 10 plus 80 into 3 by 10 plus 60 into 5 by 10. So the composite contribution per unit or the weighted contribution per unit is going to be 74 rupees. So we know that the break-even point is going to be fixed cost divided by weighted contribution per unit. Fixed cost is going to be 74,000. That is 74,000 is the fixed cost that you need to recover out of this particular supplies made to the schools, right? And the weighted contribution per unit is going to be how much? 74 rupees. 74,000 divided by 74, it's going to be how much? 1000 units. So you need to sell a total of 1000 units. A total of 1000 units. 1000 units of what? Of all the three products put together in order for you to break even, provided the selling prices are fixed at what? 200, 160 and 100. Are you clear with this? This is the meaning of this. Sir, they have mentioned it is supplied at cost. Correct only. You keep that aside. Here they are giving one fiction. They are saying, suppose I am fixing these selling prices, what is going to be the break-even point? That is what is getting asked in this particular. Are you clear with this? Yes, fine. So now you need to sell a total of 1000 units, right? Now this 1000 units, what is the breakup? Sir, how many school bags, how many water bottles and how many geometry boxes should I sell? This is what is in the ratio of 2:3:5, right? So ideally, can I say it's going to be 200 school bags, 300 water bottles and 500 geometry boxes. Are you clear with this? The breakup of this is 200, 300 and 500. That is what they have asked in the next part of the question. The third question, this is what they have asked. So part 2 of the question, total units to be sold is 1000. The breakup of this 1000 is 2:3:5, 200, 300 and 500. That is the option number B. Are you clear with this? This is what they have given. What is, find out the maximum number of units of each article that can be given at the price is given in part 2. It's an extension basically of the second part. Are you clear with this, guys? Very, very simple and straightforward here. Fine. The next one. What will be the maximum units that can be supplied to the schools of each article? Now, forget the selling price and all these things. Forget all these things. Now, what they have given, what will be the maximum units that I can sell? What can be the maximum units that can be supplied to these supplied to the school of each article? Now, you tell me, what is the total machine hours I have got? Total machine hours is 8,000. Out of these 8,000 hours, only 10% I am allocating for the supplies made to the school, which means for me to make these supplies to the schools, I have a total of how many hours? I have a total of 800 hours. Are you clear with this? Now, using these 800 hours, I need to supply what? I need to supply all the three products. But whatever products I supply, it will always be in the ratio of what? 2:3:5. It's a simple logical calculation. Now they are asking you what can be the maximum number of units of each of the products that I can supply, given the fact that I have only 800 hours allocated for this particular activity, that is supplies made to school. How can you do this? Very, very simple. Now you can assume that let the total number of units of A plus B plus C put together be equal to X. We can have that, right? I am just putting it here. I'm just putting it here. 1 second. So I have a total of 800 hours, right? And let us say I am supplying A plus B plus C, the three products, A plus B plus C, meaning what? Basically your school bags plus water bottle plus geometry box put together. Let's say the total number of units is X, right? So can I say this is being given in the ratio of 2:3:5, right? So can I say that the total number of school bags, water bottles and geometry boxes the total units of school bags, can I say, is going to be 2 by 10 into X. Correct? X is the total number of units of A plus B plus C put together. Right? That is school bag plus water bottle plus geometry boxes put together. So school bag will be what? 2 by 10 into X. Water bottle will be 3 by 10 into X, or 3X by 10. And my geometry boxes will be what? 5X by 10. Correct? So 5 by 10 into X. Are you clear with this? Right? So this will be what? The total number of units of each of the products. Right? And what will be the machine hours per unit for each of the products? So we have seen it's given in the question itself. It's given in the question itself that every unit of school bag will require what? 0.20 hours, right? And every unit of water bottle will require 0.15 hours, and every unit of geometry box will require 0.10 hour. Correct? Right? This is the machine hour required per unit of each of the products. Correct? So what will be the total machine hours required for all the three products put together? So I am supplying 2x by 10 number of units of school bags, and each unit of school bag is going to require how much? 0.2 hours. So the total hours taken by my school bag is going to be what? 2x by 10 into 0.20. Correct? Similarly, for water bottle, how much is that going to be? It's going to be 3x by 10 into 0.15. And for geometry boxes, 5x by 10 into 0.10. This will be my calculation, right? And the sum total of these three should be equal to how much? 800, because 800 is the total number of machine hours I have, and using these machine hours only I am able to supply this. Are you clear with this? So the sum total of this should be equal to what? 800. If you equate this and solve, you will get the X value. This is exactly what they have also done here. You look at this. The total hours available is 800. The total number of units of all the three products put together is X. So the number of units of bag is going to be 2x by 10, bottle 3x by 10, geometry box 5x by 10, right? So 2x by 10 into 0.20, 3x plus 3x by 10 into 0.15 plus 5x by 10 into 0.10 should be equal to 800. If you solve this equation, you will get the X value as how much? 5925. 5925 is what? So the total number of school bags plus water bottles plus geometry boxes, right? So now you need to bifurcate this into bag, bottle and your geometry boxes. How will you do? So 2 by 10 into 5925, that will be the total number of bags. 3 by 10 into 5925, that will be the total number of bottles, and 5 by 10 into 5925, that gives you the total number of geometry boxes. If you multiply it, this is what you will arrive at. So in total, what is the total number of bags, bottles and geometry boxes that you are able to supply is 1185 bags, 1777 number of bottles, and 2962 number of geometry boxes. So it's going to be the option number C. That is the correct answer. Are you clear with this? Logically understand, but from my perspective, I feel where you can go wrong is you will not take 800 hours, rather you will be taking entire 8000 hours because of the wordings. This is where you can go wrong. Similarly, in that break-even point calculation, fixed cost pertaining to this 10% capacity level alone should be taken for the purpose of calculating the break-even point. I find that many students are taking the entire fixed cost and they are doing it. Maybe this is where you need to work on. Are you clear with this, guys? Right? So that's about the fourth part of the question. And finally, the last part of the question, what should be the correct price? Now they are asking, what should be the correct price for each item as per the management decision? Now, what was the management decision? They had given, no, what they said, ideally, we are not going to do business here. For this particular supplies to schools, we are going to recover the cost. What do you mean by cost? Variable cost plus fixed cost. Now, product wise, we know the variable cost 100, 80 and 40. Product wise, do you know the fixed cost? Yes. Fixed overhead cost per unit, we calculated, in the first part itself, 18.5, 13.875 and 9.25, right? So you just add the two, so you'll get what? The total cost per unit here is going to be 118.5. Here it's going to be 93.875, and here it's going to be 40 plus 9.25, it's going to be 49.25, right? So which option has this? So I think it's option number D. Look at this. So 118.5, 93.875, and 49.25. This is exactly what we've got here. Are you clear with this? So ideally speaking, as per the management decision, if you go as per that, you should be what? You should be charging them 118.50, 93.875, and 49.25. So this is what this question is all about. So first they have given the management policy, but here the second part and all, they have given fiction. Why have they given this fiction? Suppose I am fixing 200, 160, 100. These are the fictions created. For these selling prices, how much should be the break-even point? For the purpose of calculating the break-even point, they have given some selling prices, and based on that, you need to calculate all your break-even point and all. But ideally speaking, that's why at the end they have given what should be the correct price a company should charge. Are you clear with this, guys? So that's about this entire numerical problem. Now if you look at this, this is the reason why I said I wouldn't be classifying this fully as a marginal costing question, because in this question, what you tell me, the only part of this question that had anything to do with marginal costing was the second and the third part, correct? Only the second and the third part of the question, that to calculation of break-even point, I think that was the only two aspects of this question that revolved around marginal costing. Every other aspect were all in general. In fact, if you are unitizing the fixed overheads, it's ideally absorption costing area only. Absorption costing with marginal costing along with some decision making, they have beautifully blended this together and coined one question. As simple as that. So you can watch out for this particular question in your exam. Maybe not the same question, a similar question can come in your exam as well. So with that, we have finished this particular question. Now let's move on to the next question. Now, question number 2. Knowing the hectic schedule of a student preparing for the exam, a homemaker managing work from home, or a new parent busy in some care, a freshly qualified professional, Mr. Rishi, entered into a startup business of manufacturing frozen food. Fine, they are giving some context. The story is basically not required, but nevertheless, let's quickly glance through this. The process majorly involves washing out and cutting the vegetables, which is the process 1, blanching, cooling, and mixing of ingredients with spices, which is process number 2, foaming, frying, and freezing the final products, process number 3. Basically, this is about some process costing, right? Now, before we further get into the case study, let's quickly get into the MCQs and see what they are expecting. Once we understand that, we will look for these facts while solving. Now, what they have asked, what is the transfer price value at which the output of process 1 is transferred to process 2? Similarly, the transfer price value of output of P2 transferred to P3, then transfer price value of output of P3 transferred to finished stock. What is the cost value at which the output of P3 is transferred to finished stock? Cost value of closing stock of P3. Clearly, we can understand this is about the inter-process profits. So, in process costing, you have a concept called as inter-process profits. Basically, it means that your products, your output of one process is transferred to another process, not at cost, but at some marginal profit and all. There is one numerical problem in the study material which we have solved. So this is something similar to that. Fine, they have made it as a case study based. Very simple. Let's get started. In the accounts of Mr. Rishi, he normally transfers the output of one process to the another process at cost. But being a young entrepreneur, he is interested in knowing the profit made at each and every process, right? Thus, it was decided to transfer the output of the process 1 and 2 to the next process at cost plus 25%. Further, the output of process 3 is also transferred to the finished stock at cost plus 33 1/3%. 3 processes are there: P1, P2, P3, and finally it goes into the FG. Process 1's output is transferred to process 2 at cost plus 25% profit markup. Output of P2 is transferred to P3 at once again a 25% cost plus 25% on cost. And the output of P3 is being transferred to FG at cost plus 33 1/3%. Now remember one more very important thing. One very important thing that you need to remember here. Now process 1 transfers products, its output, to process 2 at cost plus 25%, correct? Let's say 100 rupees is the cost, right? It adds a markup of 25 rupees. 125 rupees is the transfer price of the output that goes from process 1 to process 2, correct? Now remember, from the perspective of process 2, for process 2, the cost is what? 125, because it is receiving at 125. Now, whenever it is transferring its output to process 3, it will calculate at 125 rupees plus 25% on 125 rupees. Are you clear with this? That is, these processes are treated as three different entities. It will not know the breakup of what is the cost, what is the profit. Are you clear with this? But from the perspective of the head office, that is the overall company as a whole, these are the people who will be tracking the cost and profit at every single level. So in other words, when process 2 transfers to process 3, when they are saying cost plus 25%, it is cost plus 25% on its cost. For it, the cost is whatever cost it has received from the previous process. Are you clear with this? More clarity on that, you will be getting it as we navigate into this particular sum. The next one, the following information is extracted from the books of Rishi for the current year. So what they have given, process 1, 2, 3 and finished stock. What they have given here is opening stock figures, direct material, direct wages, factory overheads, closing stock and inter-process profit included in opening stock. These figures they have given. Obviously in process 1 it is nil. Why? That is the first process. It would not have received anything from any previous guy. Are you clear with this? Whereas the other two process and the FG stock, it has some transfer price involved in it, which has some profit. In the opening stock, some profit component is also involved. Are you clear with this? So now, the stocks in process are valued at prime cost. Very, very important. That is P1, P2, P3. The stocks are valued at prime cost. The finished stock is valued at a price at which it is received from process 3. Mr. Rishi wants you to figure out the following to analyze the profit generated at each process. Now, this is something that we have seen in our regular lectures, but nevertheless, one very important thing that I want to share with you all is that now, when we are preparing this particular process accounts under this particular topic of inter-process profits, now what we do is we maintain three columns: costs, profit, and then we have a total column, right? Fine. Now, this cost is cost from the perspective of company, not from the perspective of that particular process. Whereas this total column is actually the cost from the perspective of that particular process. Or in other words, inside every single line item, the breakup of cost and profit is not known to the other process. The previous process, that is process 1, is transferring its product to the next process at a markup of 25%. This markup details are not known for process 2. That is why what process 2 is doing, whenever it is supplying to process 3, it is taking this 125 rupees, whatever it has received from process 1, on that only it is computing 25% more. That is, whatever is the price at which it is receiving from the previous process, it's its own cost. It is going to be its own cost. Whereas from the perspective of the company knows, okay, they have sold it for 100. Inside that 125 rupees of markup is there. 125 rupees is only being given to process 2. But process 2 will not be knowing all these breakup. Please have this one thing in your mind. So process wise, we are going to prepare ledger accounts where we are going to be having cost, profit and total. Costs here refers to the cost from the viewpoint of the company, the actual cost. Whereas this particular processes, they will only be having one account. They will only be knowing the total figure, the loaded figure, including the profit. Are you clear with this? Sir, why is this required? You will be getting to know about this at the time when we are calculating the transfer price of these three processes. Basically, in this sum, what we need to do is we need to prepare the process accounts for process 1, 2 and 3 with a detailed breakup of cost, profit and your total columns, right? And here they have given us all the debit side items. Opening stock, how much is it? Direct material, direct wages, factory overheads. Obviously, these are all taken from outside parties. Direct material you purchase from supplier. Direct wages, it's paid to your staff, right? Factory overheads, it is pertaining to all the utilities and all that. There is no inside profit component included here. So basically, whatever is the cost will be the total figure. Are you clear with this? Only pertaining to the transactions that happen inside these processes, it will be having some profit component inside of it. Now, what we will do is, using these data, we will be preparing this particular ledger accounts. And in this case, what we will have to do is that you need to understand that these process one is going to be transferred. The output of process one is going to be transferred at a 25% markup. The same 25% markup for P2 to P3 and P3 to FG is at 33 1/3% of cost. Now, on that note, let us get started with this particular solution of process one account. Now, first process one account, as I told you guys, so this is a process one account, and you need to have a cost, profit, and a total column. 3 columns you need to maintain. Now, opening stock, this figure is given as 8,02,500. Please have the question with you, right? There is no profit inside of it, so that's going to be in the coming in your total column of 8,02,500. Now, in process one, I have made some material purchases, direct wages, right? So if you total this up, you get what? You get your total prime cost, right? And then you have your production overheads, then you will get your total cost column. Clear, guys? Are you clear with this? Now inside all these things, there is no profit element, because anyways, this is the first process. There is not a problem at all. Now, in the question, they have also given us, in the question, they have given that the closing stock is how much? This data is also given. The closing stock is going to be 10,70,000. Are you clear with this? So here, the closing stock is going to be 10,70,000. Not a problem at all. So here, once again, this being the first process, inside this closing stock, it is only going to be fully at cost. It would not have received anything from any previous guy. So this is going to be 10,70,000 on the total column also. Now we need to calculate the transfer price. Now, if you see, what is the total cost incurred here in process one? It is going to be 1,69,06,000. Out of this, they are retaining how much? 10,70,000. So if you look at this, 169,06,000, right, minus 10 lakh, once again, 169,06,000 minus 10,70,000. How much is that going to be? 1,58,36,000, right? So this is actually going to be what? This is going to be the cost of goods that I am going to transfer to the next process. But wait, I am not going to transfer this at cost. I will be adding a markup of how much? 25% on cost. So into 1.25 you do, how much you get? Into 1.25 you get 197,95,000. Are you clear with this? 197,95,000. That is going to be the total value of transfer price. This is a figure that you arrive at. So the total cost, that is the total cost minus value of closing stock, you remove. This is the value of goods that you are going to transfer to the next process. However, there is a markup involved here. This is a figure that you arrive at. Are you clear with this? Are you clear with this? Now this figure we have arrived at here. Similarly, this is a balancing figure. The total cost column 169,06,000 minus 10,70,000. You get the cost pertaining to the output transferred. So the difference between these two is going to be the profit inside this. Are you clear with this, guys? Very, very simple, but you need to do it in a certain way. This total column first needs to be balanced. Why? Because this total column is the cost column of the particular process. Are you clear with this? With the from the point of view of the process, it only will be having the total column, right? So you take the total and you calculate the value of goods that is getting transferred to the next process. On that, you calculate the 25%. Are you clear with this, guys? Fine. So now, once you do this, what happens? There is a profit element that comes in here, right? So this profit is the balancing figure that comes in here. So 39,59,000 is going to be the profit. So there is no cost pertaining to the profit. So this is going to be coming in your total column as well. And finally, this process accounts is going to be balanced. And I can say that out of the first process, the profit generated is going to be 39,59,000. Are you clear with this, guys? Right? Now let's go on to the next one. Let's go on to the next one. This is exactly what they have mentioned. Look, the calculation that I did, 169,06,000 minus 10,70,000 into 1.25. That is exactly what they have done here and arrived at the figures. Are you clear with this, guys? Now let's move on to the next one. Okay. I'll just rotate this. Now, this is going to be the process 2 account. The process 2 account. Now, in process 2, what happens? First, you have an opening stock. Opening stock, how much is it? It is given as 14,44,500. This figure is given. Now, this is what, from the perspective of process 2, it says that the opening stock value is 14,44,500. But the company knows, the head office knows that inside this ideally there is a profit of 2,14,000. How do they know? Because they are tracking all these things, and of course, whatever is received from process 1 is loaded with some profit element inside it that is given in the question. This figure is also given. 2,14,000 is given. So now you can arrive at the cost pertaining to the opening stock, which is 12,30,500. This is the cost pertaining to the company, cost from the viewpoint of the company, cost to the company. Whereas this total column, ideally, this is what the process, that particular process, actually it knows only this column. It does not know the cost and the profit breakup here. Are you clear with this, guys? Right? So now the 12,30,500 is the cost pertaining to the opening stock. That is something that you need to remember. Now, from process 1 account, what is the output that got transferred? We just found it out here. So 1.58 crores. So 1 crore 58 lakh 36,000 with a profit of 39,59,000, and the total column. This exactly comes in here on the debit side because it is now entered into process 2 and it has exited from process 1. So in process 2, it comes as a debit side item. These figures are also available. Now in process 2, so the total material cost, the wage cost, and the production overhead cost, these are all costs only. There is no internal profit inside it because you're dealing directly with third parties. You can fill up the total columns and the cost column also. In between, you can add this up and call this as the prime cost. Sir, why is this prime cost classification required here? You will get to know because they have mentioned stocks are valued at prime cost. That is the reason. Now, you add your production overheads to this. You will arrive at the total cost here. Now, what is the other data given? In the question, they have also given us what? They have given us, look at this, they have given us the closing stock in process 2. How much is that? It is 17,12,000. So now you can also arrive at this figure. 17,12,000 is the total value of closing stock, right? So this is ideally the cost from the perspective of that process, right? But the company wants to know inside the 17,12,000, how much is the internal profit and all. That is, it wants to know the cost and the profit breakup inside it. So how can we calculate? Very simple. This is the reason why they have mentioned stocks are valued at prime cost. This is the reason why they have mentioned that. Now, prime cost, we have this data here. So what data you have? Now in my prime cost, for my prime cost, if the cost is 2 crore 63 lakh 22,000, then the total value of prime cost is 3 crore 4 lakh and 95,000. Then for closing stock, I have the total value. How much will be my corresponding cost? So here, if you see, so in prime cost, right, 263,22,000. If that is the cost, the total value is going to be 304,95,000. Correct? Now, for my closing stock, if you see, if my total value is 17,12,000, how much will be the corresponding cost? So you can cross multiply proportionately and you can arrive. So if my cost is 2.63 crores, the total value is 3.04 crores. So if my total value of closing stock is 17.12, how much should be the corresponding cost to this? So you can just cross multiply and you can arrive. So 2 crore 63 lakh 22,000 divided by 3 crore 4 lakh 95,000 multiplied by 17 lakh 12,000. This is something that you can do. This cross multiplication is what they have done here. Correspondingly, they have proportionated and they have arrived at the figure here. I will show it to you. 1 second. So just rotating this once again so that you will be able to understand this. Yeah, look at this. So they have proportionated this figure and they have arrived at it. They have arrived at this value of 14,77,726. They have proportionated the value by corresponding it to the prime cost component. Now, this is how you will arrive at the closing stock value, which is being mentioned here. So it's going to be 14,77,726, and the difference between these two, you will arrive at your profit. Are you clear with this, guy? Fine. The next one, you now need to calculate the transfer, right? That is, what is the total value of output being transferred from process 2 to process 3 account. So now, this is how you will arrive at what is the total cost. So here the total value is how much? 3 crore 43 lakh 47,000, right? Out of this, the total value of closing stock is going to be 17,12,000. This total column is the only column that the process knows, right? This cost and profit breakup is what the company, the head office will know, but the process will know only the total column, right? So technically speaking, what is the total cost from the perspective of the process? What is the total cost value of the goods being transferred to the next process? It is going to be 343,47,000 minus 17,12,000, correct? So look at this. This is what they have mentioned here. 343,47,000 minus 17,12,000. This is the value cost of the process, but they are not going to transfer it at cost. They are going to add a markup to this of 25% into 1.25. They arrive at 4,07,93,750. That is going to be the total value of the output getting transferred to the next process, process 3. Are you clear with this? Right now, sir, how do you calculate the cost of pertaining to the goods transferred to this particular process? Very simple, balancing figure. So this column, this cost column has a total of 301,74,000, right? Minus the cost of closing stock, you will arrive at the balancing figure, and you have this figure now, you have the cost now. The difference between these two, you will arrive at what? You will arrive at the profit inside the output transferred from process 2 to process 3. Are you clear with this? And now what happens? This profit column you have, right, 123,31,750, right? Out of that, you remove all these things. That is, the balancing figure of this particular profit column is going to be the profit of that particular process. Are you clear with this? Sir, why is this, why do we have some profit on the debit side also? Because this is the profit from the perspective of the company, right? On whatever I have received, from the previous process, that is process 1, inside that also some profit is there. This is the overall profit made as of now, cumulative profit made by P1 plus P2, right? Out of that, remove whatever P1 has made, you will arrive at the profit exclusively made by P2. Are you clear? That is the concept involved here, and the exact similar calculation you need to do for process 3. So in process 3, what we need to do is, I'll show you here. So once again, the same thing goes the other way around. In process 3, if you look at it, this opening stock figure, you have 21,40,000. The profit inside is given. You subtract the 2, you will get the cost of opening stock. In process 2, that is transferred made from process 2, this figure you can get it from the previous process. So this figures, the set of these 3 figures, you get it here. The same figures will enter into the process 3 account, right? And then direct material, direct wages, prime, you get the subtotal prime cost. You get the manufacturing overheads. These figures are all given in the question. You will arrive at the total cost. Something very similar is what we do here right now. So now what we do is closing stock. This figure is also given in the question, 20,86,500, right? So what is the cost pertaining to the closing stock? Similarly, you can use this prime cost component. If the prime cost in the cost column, if it is 378,98,274, the total value is going to be 5 crore and 5 lakh something. So here, if I have a total of 20,86,500, how much should be my corresponding cost? You proportionate it. So how will you do that? 3 crore 78 lakh 98,274. If that is the cost, the value is how much? 505,30,750. Now, if the total value is 20,86,500, how much should be my cost corresponding to that? If you arrive at it, this is the calculation they have done. Look at this, 378,98,274 divided by 5 crore and 5,30,750 into 20,86,500. You arrive at the cost of the closing stock, which comes out to 15,64,884, right? This is what it is. Are you clear with this? Fine. Now, once you do this, now what do you get? You have the total cost here, right? And you have the closing stock also, right? You can subtract the two. So 5 crore 40 lakh 88,500 minus 20 lakh 86,500. This is going to be the cost of the units that I'm going to transfer, of the output that I'm going to transfer to the finished stock. But I'm not going to transfer it at cost. I'm going to transfer it at cost plus 33 1/3%. Correct? That is what is given in the question. So here what you will do, transfer price, the total cost, that is total cost of process 3, which is 540,88,500. this figure is given here, minus the closing stock of 2086,500. If you do that, that is ideally the cost of the units transferred to the next process. This is going to be the cost from the perspective of process 3. On that, you load this profit of 33 1 by 3 percentage, you arrive at the transfer price value of 6 crore 93 lakhs and 36,000, right? This is how you arrive at this figure. And this figure is a balancing figure of this particular ledger. The total of this ledger is going to be 414,56,024. From that, you subtract the cost of closing stock, you will arrive at the balancing figure, and the difference between these two will give you the profit component hidden inside your what? Hidden inside your output transfer to the finished stock. Are you clear with this? Now, what you need to do, even the profit column, you balance it. So you have a total of 2 crore 99 lakh 66,476, right? From that, you subtract these figures, you will arrive at the balancing figure of profit. That is the profit made in this particular process. Are you clear with this, guy? Fine. Now, with that, all the three processes are done. All the three processes are done. You can now go and just answer to the questions that they have asked. Now, first question, what is the transfer price value at which the output of process 1 is transferred to the next process 2, right? So, transfer price value of output of process 1. So, what is it? You can just go and find it here. So, TP, the transfer price value of output of process 1 is going to be 1 crore 97 lakh 95,000. It's going to be 1 crore 97 lakh 95,000. So the answer is going to be answer A. Clear with this, guys? Fine. The next one, next question. What is the transfer price value at which the output of process 2 is transferred to process 3? So go to your process 2 ledger, your process 2 account. The value is going to be what? It's going to be 4 lakh 7,000, 4 crore 7 lakh 93,000 and 750. That's about it. So it's going to be option B, 407, 93, 750. The next one, what is the transfer price value at which the output of P3 is transferred to finished stock? And they are also asking for the cost value of the output of P3 being transferred to the finished stock. You can just go to P3 account. You just go to P3 ledger, right? So you just go to P3 ledger, and here you can see, this is going to be the process 3 account, right? The TP value is 693,36,000. That I think is option number B, right? So option number B, yes, sorry, option number D, that's going to be 693,36,000, right? That's going to be option number D. And they're also asking for the cost value. The cost value is 3 crore 98 lakh 91,140, right? So that's about here. 3 crore 98 lakh 91,140. That's the answer for the fourth part of the question, which is option number B. And finally, what is the cost value of the closing stock in process number 3? So in process number 3, cost value of closing stock is going to be 1564,884. As simple as that. 1564,884. That's the option number. That's about this particular question. Now here, the main trick is with respect to computing the transfer price, and also the second important aspect of this particular question is about calculating, valuing your closing stock. These three are very, very important, because this is where students get confused. See, the cost column is not cost to the process. It is cost to the company. The total column is actually the cost to the process. On that only the transfer price gets loaded. Are you clear with this? Fine. With this, we have completed this particular question number 2. Now let's go on to the next question. Now, let's go to the next question number 3. So this question is from the employee cost chapter. So let me read out the question for you. Harsha Limited pays its workers on a time basis because their services cannot be tangibly measured. The company's normal working week includes 5 days of 8 hours each. Sometimes the workers need to work late at night, which was 3 nights of 3 hours each for the current week, and the average output produced per worker the week is 120 units. So basically what they are doing, 5 days into 8 hours, that brings a total of 40 hours. Then for 3 nights alone, they are making them work for 3 hours. That makes it how much? A total of 9 hours here. So totally they have worked for 49 man hours. Every worker has worked for 49 hours, and they've achieved an output of how much? 120 units. Now, information regarding the incentive rate is given as follows. So currently what the company is doing, For every day shift, for every hour in the day shift, they are paying at the rate of 320, and for the night shift, they are paying at the rate of 450 per hour. However, this time basis payment made workers lazy, making their expected output lower. As workers started doing more of night shifts for higher earnings with minimal impact on the outputs, the company decided to shift on to a system of payments on output basis. So what people will do, obviously, so if you are doing the same work in the night, you are getting paid 450 rupees instead of 320 rupees. So everyone started becoming lazy and they wanted to work to the night to earn more, not to produce or not to increase their output and all. So this is what happened. So now what the company did, they are planning to come up with a particular incentive system that is linked to the output, right? So what they are saying is, information regarding the amended incentive system rate is given as follows. Time rate, as usual, per hour, the company is willing to pay how much? 320, but now they have included one more rider here. For basic time allowed for 15 units is 5 hours, which means what? To produce 15 units, you are allowed to take how many hours in total? 5 hours in total. And now they are saying the piece work rate is basically, we are willing to pay you 15% extra as a bonus for every unit produced. So add 15% to basic piece rate. This is what they have given. How to compute, I will walk you through that when we are doing the solution. Now, in the amended incentive system, the normal weekly working hours remained the same while the production increased to 135 units. This is what is given. Now, calculate the labor cost per unit. Labor cost per unit is how much? Total labor cost divided by the units achieved, right? Output, as per the existing incentive system along with the amended incentive system. Very, very simple, guys. This is a very simple question. So now, existing labor cost per unit. Basically what they have done, 5 days into 8 hours, 40 hours. Night shift is 3 nights into 3 hours, it's going to be 9 hours. And they have given in the question that a total of 120 units have been produced. So now, how much is the total employee cost incurred? Currently, 40 hours into 320, yes, 320 is the day rate, it's 12,800, 9 hours into 450, the night rate, 4050, a total cost of 16,850 rupees is incurred to get an output of 120 units. The labor cost per unit is how much? 140.42. Are you clear with this? Now what the company is planning to do is, they are planning to amend their particular manner of payment. Now what they have said, they are expecting and they are making the workers work how much? So 15 units are being produced in a span of just 5 hours, right? Which means to produce 135 units, it's given in the question, they have actually produced 135 units. What is the time that is taken under this revised incentive system? It's very simple. It's going to be 5 hours is what you're taking to produce 15 units. To produce 135 units, how much is that going to be? Very simple. It's 5 divided by 15 into 135. So you proportionate it. So basically what is happening? Currently, these guys work for 45 hours and they are able to achieve how much? 135 units. Are you clear with this? Now, what is the labor cost for producing 135 units? Now they are saying for each of these 45 hours, the company is paying the day rate, right? 320 hours, 320 rupees they are giving. No day, night shift and all, no separate difference here. Every single thing is going to be paid at the rate of how much? 320 rupees. Then sir, why will they be motivated to work better? They have said, look at this. They are paying a bonus of 15% on the basic piece rate. So how would you arrive at that? Currently, the company is paying how much? 14,400 is the basic rate. For how many units? To produce 135 units, correct? So per unit, how much is the piece rate? 14,400 divided by 135, that is going to be, ideally speaking, 106.666666 is going to be the basic piece rate. Now 15% of this is what the company is willing to pay as bonus. So into 15% for every single unit into 0.15, that comes out to be 15.999999, right? Like that, they are going to pay for a total of how many units? 135 units. Like that they are going to pay. So like this, they are going to pay for each of these 135 units. So into 135, that gives you how much? 2160 rupees, right? This is how they have calculated. That is the current piece rate, 14,400 divided by 135. Get the piece rate. On that 15% is the bonus value, and on the actual production of 135 units, or directly, ideally speaking, what you can do, this itself is the piece basis of payment. On this, you apply 15% flat, you will get the same answer only. But this is how the institute expects you to present, because it is being converted into a piece rate. Are you clear with this? So this is going to be a total payout of how much? 16,560 is going to be paid under the new scheme, right? And this is the cost you incur for producing how many units? 135 units. So now the total cost, labor cost per unit, is going to be what? 122.67. So now, under the existing scheme, how much was the cost? It was 140.42. Now, because of this revised incentive scheme, how much is it reduced to? It's become 122.67. So, and hence, this is going to be, I think the option is going to be option number A, 140.42 and 122.67. Are you clear with this? Right? A very simple sum. But then here the basic, the only catch here is with respect to calculating the revised incentive scheme, and that's about this. So with this, we have finished this particular question. Now moving on to the next question, which is question number 4. This question is from the chapter overheads. Garments Limited run a sewing factory for medical garments, but the company suffers from the limiting factor, which is labor. Each sewing machine needs 100% attention of one person at a particular point of time to operate it. The company has 8 number of alike sewing machines, and on which 8 operators work separately. So the following particulars are furnished for a period of 6 months. Now paid hours for all the 8 operators, that's going to be 9594 hours. So this is going to be the total paid hours, the hours for which I am paying them, right? The effective working hours the effective working hours for all the 8 operators, effective working hours is going to be how much? 9360. So the total hours for which I am paying is 9594. This is for all the 8 operators put together. But out of this, they effectively work for how many hours? 9360. So only for the effective hours for which they are working, the machines will be running. Are you clear with this? Because the difference between the two would be the idle time. That is basically going to be the time for which they are resting, but still the company will be paying for that also, right? The average rate of wages per day of 8 hours per operator is going to be 110. So what is this? 110 rupees is not the hourly rate. It is the rate for a day of 8 hours. So hourly rate is going to be how much? 110 divided by 8. Are you clear with this? Right. Next, power consumed, the figure is given. Supervision and indirect labor, the figure is given. These figures are all given for a period of 6 months. The following figures are given for a year. Insurance cost, sundry expenses. Yes, depreciation is charged, is 10% on the original cost of all the sewing machines. Fine, so depreciation figure is given as 10%. Repairs and maintenance comes up to 5% of the value. Original cost of the sewing machines, all the sewing machines put together, it works out to 41,60,000. They are asking you to calculate what the comprehensive machinery rate. So comprehensive machinery rate is basically what? So all the machine related overheads divided by the effective hours for which you are running this machine. The effective hours for which the machine is being run, this is already given in the question. It's going to be 9360. So the denominator is sorted. Numerator, what you need to do, you need to collect all the costs that you are incurring with respect to running this machine for a period of 6 months. All these machines put together. Clear with this? Fairly a straightforward question. So let's quickly do this question. So now guys, so first, what is going to be the operator's wages? They have given that they work for a total of how many hours? 9594 hours for a period of 6 months put together. They work for 9594 hours, right? So what is the hourly rate? 110 divided by 8. Are you clear with this? So basically the calculation here is, it's going to be 9594 hours into 110 divided by 8. So they have done the division here, but anyways, it's going to be the same, right? So if you do this, how much you get? You get 131,918. Fine, that's going to be the operator's wages. Power consumed, this figure is given. And supervision and indirect labor, this figure is also given. Insurance charges, they have given it on a per annum level, divided by 2, you get the figure. Similarly, sundry expenses, 7,15,000, it's per annum. So you can do into 6 by 12 or divided by 2 directly. It's going to be 357,500. Depreciation is given as 41,60,000. 41,60,000 into 10%, that's the per annum figure, divided by 2, you get how much? 2,08,000. Similarly, repairs and maintenance, 5% on the value, divided by 2, you get what? 1,04,000. So this is going to be the total overheads for a span of 6 months, divided by what? Divided by 9360. So that's going to be the effective hours for which it's being run. So the comprehensive machine hour rate is going to be 119.34. So that brings you with option number D. Right, so option D, that's going to be 119.3. Are you clear with this? Fine, that's about the sum. It's a very small question, and this is basically on comprehensive machine hour rate. I don't think there is much of riders. In fact, the institute study material sum had a little bit of complexities. This one was a straightforward, right? So with this, let's move on to the next one. Now, question number 5. This sum is regarding cost sheet. It's basically a missing figure question. The following information is available for the month of March relating to manufacturing of a product. Cost of sales, the figure is given. The opening stock of raw material, direct wages, higher charges paid for plant to be taken as an indirect expense, which is basically a production overheads. Salary to office staff is given. Maintenance to office building. So office staff, office building, these two figures will come under AOH, right? Depreciation on delivery van and warehouse charges, this comes under selling and distribution overheads, SOH. Stock value as in 31st March, they've given the stock closing value of raw material and the realizable value on scrap, sale of scrap, those 4 addition, 1 deletion, that deletion item is given here. Factory overheads is given as 20% on prime cost. Find out the value of raw materials purchased with the help of statement of cost. So this is basically a reverse working question. How do you go about with this? Very simple. You first write down the format of cost sheet. Once you have written down the format of cost sheet, right, I would suggest that you maintain 3 columns, particulars, amount, and then have a broad column for workings, right? So first the particulars column, fill in the format of cost sheet. The moment you do this, then the second step is to go on and plug the given figures. Whichever figure is given, just go plug it here, right? Now what you need to do is the balancing figures you can automatically calculate and fill those figures also. Now, there will be certain figures for which you need to do the calculation that you can use the third column, which is going to be your workings or calculation column. You can use these calculation, or maybe you can come down and write a working note depending on the complexity of the working. Are you clear with this? Very simple and straightforward, time-tested approach. It will be helpful for you. Now, what I have done this entire sum, I have solved it. I will just present it to you right now. So now you just have the question with you. So now what they have given. So in this particular question, so I have just written down the format of cost sheet, which is opening stock of raw material plus purchase minus closing stock gives you what? Raw material consumed, add direct wages, no direct expenses here. That gives you prime cost. In this question, they have given higher charges paid for plant, indirect expense. They are maintaining it as a separate line item. And apart from that, they have mentioned factory overheads is some 20% on prime cost. Sorry. Ideally speaking, this higher charges should have been a part of POH only, but they want to retain the identity. So I am also doing that. So apart from this higher charges, which is considered as an indirect expense, one more line item POH I have inserted. Ideally speaking, it should be clubbed, but in this question, that's how they want us to give it as. If you do this, you get the gross works cost. Now opening WIP, closing WIP is all nil. It's not given. So that can also be taken as a net works cost. Then 4 addition, 1 deletion. In that 1 deletion alone is that less scrap income, and you get what? Cost of production, right? To this add opening FG minus closing FG, you will arrive at cost of goods sold. No FG stocks here, so directly I bypass this. Cost of production itself can be called as cost of goods sold. To this we can add our AOH, add SOH, we will get cost of sales. The format of cost sheet, quickly I have revised it once here. Fine. Now what we do? All we need to do is the blue ink item are all given items. This is how I have done it for the sake of presentation. It will be easy for you to understand. These figures are all given. So we have plugged all the blue ink items, which is the given figures. So now what we will do is we will start from the bottom. This figure is given. This is given. This is also given. So the cost of goods sold, can I say it's a balancing figure? That is nothing but this is what I have mentioned here. Cost of sales minus SOH minus AOH. You will get this cost of production. Right. Now we have got this figure. This figure is also available. So the networks cost is a balancing figure, right? So can I say, so networks cost minus scrap income is COGS. Correct? So COGS plus scrap income will become net works cost. COGS plus scrap income will become net works cost. Are you clear with this? So with this, we are getting this figure also, net works cost, right? Now what happens? Now here, if you see, this figure is not available. This figure is also not available. Only one figure is available with us. So which means here you can't do this balancing figure and all because there are two missing figures here. Now what do you do? Read the question. They have given that factory overheads is 20% of prime cost. This POH is expressed as a percentage of prime cost. With this, we can frame an equation and arrive at the prime cost value. Correct? This is the reason why I have put up a note here. So can I say here, POH is 20% of prime cost, or in other words, prime cost, we don't know the figure yet, plus 324,740 given in the question. So plus 324,740 plus production overheads, which is 20% of prime cost, plus 0.2 PC. PC stands for prime cost, plus 0.2 PC gives you how much? This figure we have arrived at 34,91,540. So 34,91,540. Correct, guys? Yes, with this we have framed an equation with only one variable, which is PC. So I can say 1.20 PC plus 3,24,740 gives me 34,91,540. You solve for this. 1.20 PC gives you 31,66,800. So the prime cost is going to be 26,39,000. You just solve for it, you will get the prime cost value. Production overheads will be 20% on 26,39,000. It gives you 5,27,800. Are you clear with this? Now you can just plug these two figures here. You can just plug these two figures. You have got this, right? Now go up once again. So raw material consumed, we are yet to find out. We have direct wages figure. Now we've got the prime cost figure. So raw material consumed is going to be prime cost minus direct wages. That is what I mentioned it here. Are you clear with this? You'll get this figure. And now finally, so you have opening stock of raw material, you have closing stock of raw material, you have raw material consumed. Now it has been arrived at. So the balancing figure is going to be your raw material purchases, or in other words, raw material purchases is going to be raw material consumed plus closing stock of raw material, add opening stock of raw material. So you will arrive at this figure. So raw material consumed plus closing stock of raw material minus opening stock of raw material, you will arrive at what? Raw material purchases. Simple reverse working question. So now finally the value of raw material purchase is going to be how much? 10,40,000. So you can just go here and fill it up. It's going to be 10,40,000, which is option number A. Are you clear with this, guys? As simple as that. It's going to be a fairly simple question because there are much more complicated questions in missing figures in our institute study material, right? So that's about this question. I think this is exactly what they have done. But in fact, I have walked you through the presentation aspect also, because just by looking at this solution, you might not able to understand what exactly has happened. But yes, this is what they have also given. The answer is option number A, 10,40,000. They have put some star and all here, and they have done the workings, exactly the same working only we also did, and we arrived at the figures. Are you clear with this? Fine. So with this, we have covered this particular question as well, which is question number 5. So now let's move on to the next question, which is question number 6. Now, ICT Limited belongs to pharmaceutical industries. The chemical process that ICT Limited operates converts one compound into 3 categories of medicines, which is beta tab, forklift, and tegricap. So beta tab and folic is they are already converted to final product at the split off point. Tegricap needs further processing along with addition of new compound with it. Fine. So basically this company deals in manufacturing of 3 different products, 3 different medicines, right? Some beta tab, folic, and tegricap. Fine. And these two, the first two, B, F, and T. So the B and F, they are already converted into FG at the split off point itself. The product T alone, it requires further processing to be, for you to be able to sell it further on, right? The market for beta tab and folic is highly active, thus the production is sold at a split off point. However, tegricap can be sold only after further processing it. Perfect. The following information is provided for the current year. So what they have given is for each of the 3 products, quantity sold is given and the selling price per ton is also given. Perfect. The selling price is expected to remain the same in the coming years. The total joint manufacturing cost till the split off point is going to be 62,50,000, and the amount spent for further processing with respect to Tegri cap is going to be 31 lakhs. So what they have given, the joint cost is given as 62.5 lakhs, and the further processing cost for the Tegri cap product is going to be 31 lakhs, which is given in the question. The details regarding the closing inventories are given as follows. So for each of the products, how much is closing stock is given. You are required to compute the joint cost to be allocated to each of these three products using NRV method. Now, the very important thing that you need to understand here, this is exactly one adjustment that I specifically covered in our regular classes also. One specific adjustment that I covered here. Now, what they are asking for, what is the total joint cost? 62,50,000, right? This needs to be properly apportioned between the three products using what method? NRV method. How do you arrive at NRV? The final sales value minus any further processing cost or any cost incurred after the split off point you remove, you arrive at NRV. That NRV will be the basis for you to apportion this 62,50,000. Now, how do you arrive at NRV? Now, this is where many students do a mistake. What they do? First, final sales value. How will they arrive? So the units sold into selling price, they will multiply this, arrive at the final sales value. From that, for the first two products, B and F, there is no further processing cost. For T alone, there is further processing cost. Given the question 31 lakhs, you reduce that, arrive at the NRV, use that as a base. Wrong. Sir, what is wrong here? That's only correct. No. For the purpose of here we are calculating the NRV for what? For the purpose of apportioning the joint cost of the products. Correct? Now, while calculating the NRV, you should not just take the sale value of units sold. You should find out first how many units got produced, total units produced, right? For the total units produced, what is the NRV you need to calculate? Here, if you see, 372 units were sold, but 360 units were completed, but they were remaining unsold. If you add the two, you will get what? The total units produced. In this question, no opening FG is given, correct? So what is the total production? Total production is, so basically the units sold plus closing FG minus opening FG. Opening FG is not there, take it as 0. So basically in this case, the total units produced is going to be units sold plus closing value of FG, the closing units, correct? Right? Closing stock, you add the two, you arrive at the total units produced. For these total units produced, multiply with the selling price, you will arrive at the sales value of the total production. From that, you reduce the further processing cost. You will arrive at the NRV. That NRV can be taken as a base to apportion. Are you clear with this? The most important aspect here is NRV calculation should be done on units produced and not just on units sold. That's something that you need to understand. Now, look at this. Look at this. Number one, calculation of total production. So, product wise, they have taken the total quantity sold, add the closing inventories. If opening inventory is that, you will subtract that also. You will get the total units produced. Are you clear with this? Now what they have done, they have just gone ahead to calculate the NRV at split off point. How would they do that? So just now we calculated the total number of units produced, right? Selling price per ton, it's given in the question as 7,500, 5625 and 3750, right? You multiply the two, you will get the final sales value of the total production, not just for the units sold, because the split off the joint cost is incurred for every units produced. It is not incurred only for the units sold, correct? That's the reason why we are arriving at the total value of production, right? You multiply the two, you will get the final sales value, right? From that, less any cost incurred post a split off point. That's actually applicable only for the third product, Tegri cap, 31 lakhs, right? You will arrive at the NRV. So now 54.9 lakhs, right? Then 66 lakh 3,750 and 26 lakh 7,500. These three are the NRVs for each of these three products, correct? So now your total joint cost of 62 lakh 50,000. So 62.5 lakhs should be apportioned between these three products in this particular proportion. Are you clear with this? Right? So now how do you do that? Very simple. So this is a basic calculation. So you add the two, you add the three figures, you get the total NRV of 147,01,250. So what is going to be the beta tab's share of your joint cost? It's going to be 62,50,000 into 54,90,000 divided by 147,01,250. That's going to be 23,33,985. Similarly, FOLIC, it's going to be 62.5 lakhs into 66,03,750 upon 147,01,250. That's going to be how much? It's going to be 28,07,478. And finally, category cap, it's going to be 62,50,000 into 26 lakh, here 26 lakh 7,500 upon 147,01250. That gives you a total of 11 lakh 8,537. Are you clear with this? Fine. So if you do this, you will get each and every figure directly. See here, the main catch here is not about everyone knows to calculate NRV, the formula and all you know. But the main and the first and foremost thing that you need to remember here is NRV should be calculated on the total production, and hence the answer is going to be option number B. It's going to be option number B, which is this 23,33,985, 28,07,478 and 11,08,530. So that's about this particular question. Remember that NRV should be calculated on units produced and not just on units sold, right? Now going on to the next question. This is a question on core marginal costing, a small question. Miss Gauri has the business of selling pens. She has set up this pen retailing for over 10 years with a good PV ratio. Her average cost from retailing is 11.25 per unit if she sells 16,000 units, and is rupees 11 per unit if she sells 20,000 units. So this question is on volume analysis. Okay, so they have given the cost per unit, volume, cost per unit for a different volume. It is not constant on a per unit level, so clearly this is not a variable cost. So what do? You arrive at the total cost for each of the two volume levels. So you will find out that it is not the same. So it is neither fixed nor variable. So you need to segregate and find out how much is the variable cost per unit and how much is the fixed cost. This you need to do. For the current month, she has also charged rupees 5,000 towards depreciation and rental payment due, which means what? It is a non-cash item. The excess of sales revenue over variable cost is rupees 3.33 per unit. Basically, what is this? Contribution per unit. You are required to calculate the break-even point in units and the cash break-even point and the PV ratio. So BEP, cash BEP and PV ratio is all you need to find out. Now, very simple. So let's quickly do this. So now what have they given here? They have mentioned that her cost per unit, right, is going to be 11.25 rupees per unit if she is going to sell how many units? 16,000 units. Similarly, the cost is going to be rupees 11 if she is selling how much? If she is selling 20,000 units, right? So which means how much is the total cost if she is selling 16,000 units? 11.25 into 16,000, that's going to be rupees 1,80,000, right? And here it's going to be 20,000 into 11, that's going to be rupees 2,20,000. Right? Now, is this a variable or a fixed cost? It's not variable because it's not constant on a per unit level. It's not fixed also because it's not constant in total. So this is actually a clear case of semi-variable cost. So what you need to do, you need to segregate this into variable and fixed components. How will you do that? This increase in cost from 1,80,000 to 2,20,000, right? This increase of how much? 40,000 rupees is nothing but the variable component incurred for this incremental units of how much? Incremental units of 4,000 units, correct? So basically, can I say the variable cost in this case, variable cost per unit is equal to delta total cost divided by delta units. That's going to be how much? Rupees 40,000 divided by 4,000 units, and that's going to be how much, guys? Rupees 10 per unit, right? It's going to be 10 rupees per unit. Right now, you can take any one output level, take 20,000 units output level. Now, for 20,000 units output level, I have a total cost of how much? 2,20,000. This 2,20,000 is a component of both fixed as well as variable. So, can I say 2,20,000 rupees is equal to fixed cost plus some variable cost? Variable cost is how much? This is actually for 20,000 units output level. So, 20,000 units into, we just found out the variable cost per unit, which is 10 rupees. So now 20,000 into 10, that gives you 2 lakh rupees. So 2,20,000 is equal to fixed cost plus 2 lakh rupees, or in other words, your fixed cost is going to be how much? The balancing figure of 20,000. So now we calculated the fixed cost, which is going to be 20,000 rupees. Right? So now we can calculate the break-even point and all that. It's very, very simple and direct. Now look at this. This is what they have also done here. This is exactly what they've done here. So change in total cost divided by change in units, variable cost per unit 10 rupees they have found out, right? Similarly here the fixed cost is total cost minus variable cost. They have arrived at the fixed cost of 20,000 rupees. Now break-even point is what? Fixed cost divided by contribution per unit, 20,000 divided by contribution unit is given in the question 3.3333. So you'll get how much? 6,000 units as the break-even point. What is a cash break-even point? It is cash fixed cost divided by contribution per unit. What is cash fixed cost here? It's going to be 20,000 minus 5,000 rupees. 5,000 is your non-cash fixed cost. Remove that. It's going to be 15,000 rupees divided by 3.333. You get how much? So 20 minus 5, 15,000 divided by 3.33. You get how much? 4,500 units. That's going to be your cash fixed cost. And finally, what have they said? They have given that. Okay. So finally, they have also asked for PV ratio. So PV ratio, how much is that going to be? PV ratio is contribution per unit divided by selling price. So contribution per unit is how much? 3.3333. Selling price is not given. It's easy. They have given the variable cost, correct? Variable cost, sorry. We have found out the variable cost of 10 rupees, right? Plus contribution. Variable cost plus contribution is going to be equal to your selling price. So selling price minus variable cost gives you what? Contribution per unit. Or selling price is nothing but what? Contribution per unit plus variable cost, right? So that's going to be 10 rupees. That's going to be variable cost plus 3.3333. Are you clear with this? That's how you arrive at it. It's going to be 25% in total. 6,000, 4,500 and 25%. That is going to be your answer here, right? So 6,000, I think, okay, answer which option did we? So it's going to be option number B. Yeah, 6,000, 4,500 and 25%. Right? So that is going to be the solution for this particular question number 6. Right? So that's about the part of MCQs. Now let's move on to the descriptive questions. Ideally speaking, these are also descriptive questions, but they have just given 4 options and made it as MCQ, but these are also some comprehensive questions that we just solved. So now let's move on to the next segment of descriptive questions. Now question number 8. This question is about material cost. So in this question, they are going to test you on the concepts in EOQ and of course, whether or not to go for a discount. Now let me read this question for you. Anil Limited uses 6 kgs of material EXE to produce one finished unit of a product EME. The current demand for product EME is 16,000 units quarterly. 1 kg of material EXE costs rupees 40. Costs relating to the quotation, documentation works, employee costs directly attributable to the procurement of material every time the order is made is 2,000 rupees. So basically this 2,000 rupees is nothing but ordering cost, right? And now what they have said, so 1 unit of FG requires 6 kgs of raw material, right? Then what they have said, the current demand for the product output EME is 16,000 units quarterly, which means what? 16,000 units into 4. So in a year, that is going to be the overall volume of the output, right? So that into 6 will give you the total annual requirement of raw material. Are you clear with this? Fine. Ordering cost is given as 2,000 rupees. And the cost of fund invested in inventories, the cost of storage, etc. is estimated to be 15% per annum of average inventory. So basically the ordering cost is given as 2,000 rupees. Carrying cost per unit per annum is given as how much? It's given as 15% per annum. So basically you apply this 15% on your, on 40 rupees, you get your carrying cost per unit per annum. Fine. So in this question, what have they asked for here? So they have just asked for what? Here, calculate the economic order quantity for material EXE and comment, should Anil Limited accept an offer of 2.5% discount by the supplier of material EXE if the supply of annual requirement of material is made in 4 equal installments. So this is all they've asked for, right? So now easy sum, let's quickly do this. So here guys, first 16,000 units is the demand of the output per quarter. So into 4 quarters, that's going to be the total demand for the output, and every unit of output requires 6 kgs of raw material. 16,000 into 4 into 6. So A is going to be how much? 3,84,000, right? So A is going to be 3,84,000. Ordering cost per order, we saw it was how much? 2,000 rupees. And carrying cost per unit per annum is how much? It's going to be 15% on what? On 40 rupees. So 40 rupees into 15%, that's going to be your carrying cost per unit per annum. Right? So EOQ, the formula is root of 2 AO by C. So root of 2 into A, which is 384,000, into O, 2000, divided by C, which is 40 into 15%. So you get an EOQ of how much? 16,000 kgs. Very simple. Now, what have they said? Evaluation of the cost under the different options. Now, they have asked the question. Now, should we accept a discount of 2.5 percentage if the supplier is asking us to purchase the material in 4 equal installments? This is all they are asked for. This is all they are asking for. Now, what will happen right now to the order size? Every time I place an order under EOQ, it's going to be 16,000 kgs. Correct? Now, if I'm going for 4 equal installments, so how much will that be? Annually, I'm going to buy 3,84,000 kgs divided by 4. So every time I place an order, now the order size, order quantity will be how much? 96,000 under the proposed plan. So now in a year, number of orders, how much is that going to be? 3,84,000 divided by 16,000, right? That's going to be 24 under the current EOQ level. Here it's going to be 4. It's given, or you can even say 3,84,000 divided by 96,000. It's going to be 4. So now what is going to be the purchase cost per kg? Currently it is 40 rupees. Now under the new plan, they are giving us a discount of 2.5%. 40 minus 40 into 2.5%, that gives you 39 rupees. The total purchase cost is going to be how much? The total purchase cost is going to be, so 3,84,000 kgs into 40 under the EOQ level, and under the new proposed level, it's going to be 3,84,000 into 39 rupees. That's going to be 1,49 lakhs and 76,000. What happens to the ordering cost? Ordering cost is going to be per order 2,000, number of orders in 24. So 24 into 2,000, 48,000. Here it's going to be just 4 orders are being placed. 4 into 2,000, it's going to be 8,000. Fine. How about carrying cost? Carrying cost is going to be average inventory into carrying cost per unit per annum. Average inventory is how much? Order size is 16,000. So 16,000 by 2 is the average inventory into 15% into 40. Right? It's going to be 48,000 is the carrying cost under the EOQ level. Under the proposed level, how much will that be? So on an average, generally how much do I order for? 96,000. Average inventory will be 96,000 divided by 2 into 15% on now the revised price of 39 rupees. It's going to be 2,80,800. Are you clear with this? So now you add up the purchase costs plus purchase cost plus ordering cost plus carrying cost. Under the current EOQ level, it comes out to 1,54,56,000, whereas under the new proposed level, it's going to be 1,52,64,800. So obviously under the new level, that is, if you go for the price discount, what happens is your cost will significantly lower. So the total cost is lower if Unlimited accepts the offer of 2.5% discount by the supplier when the supply of annual requirement of material X is made in 4 equal installments. So in this case, you can go for this particular discount. As simple as it. Very straightforward question. So in this case, if you have to deviate, generally if you deviate from your EOQ, the cost will be more. But here it is good because they are giving a discount that compensates, and even more it is better. The benefit is greater than the cost. That is the reason why we compare all the 3 costs, the purchase cost, ordering cost, as well as carrying cost. We add up the 3 and the total cost is being compared under the 2 alternatives. And in this case, the discount seems to be a viable option and it makes sense to go for it. You clear with this? Fine. So with that, we are done with question number 8 as well. Now question number 9. So this question is about Halsey and Rowan plants, but with a small twist they have given. It's fairly a simple problem. So let me read it for you. AB Publishers works for various educational institutes for editing, binding, printing of various books and magazines on job work basis. Currently, the company has employed 30 workers and pays them on hourly rate basis for each job assigned. To complete one of the process of binding, the average time allowed to an employee is 8 hours for a 10-page magazine. In the month of March, 2 employees, C and D, were given 21 and 30 units of magazines respectively for binding work. The following are the details of the work assigned. So C and D are 2 workers, right? Work assigned 21 units means what? 21 magazines. And for D, it's going to be 30 magazines. The actual time taken is given here. The existing rate of wages is rupees 60 per hour. So the hourly rate is how much? 60 rupees. With a bonus as per Halsey system. Halsey is what? 50% of time saved into your time rate is going to be your bonus. However, a new wage agreement has been signed between the employees in the company where the employees will be paid rupees 65 per hour with effect from April month. That is next month, right? Currently we are in March month. So as of now, the rate is only 60. From next month onwards, it is going to be 65. This is an agreement. But inadvertently for the month of March, the accountant of the company paid the wages to these employees considering the rate of wages as rupees 65 per hour. So per hour he has paid how much? 5 rupees more. 65 minus 60. You are required to calculate the amount of loss that the company has incurred due to the incorrect rate selection in the month of March. The loss incurred by the company due to incorrect rate selection had it followed Rowan system. So first is what? Loss incurred by the company due to the incorrect rate system, due to choosing the incorrect rate, right? Upon following Halsey. Currently the company follows Halsey. Now they are asking, do it once again as per Rowan, and the amount that could have been saved if Rowan's scheme of bonus was followed. That is the difference between the two. Clear with this, guys? Now, very simple. The calculations are simple. All you need to do is you need to find out how much extra the company is paying. That's all, because of this mistake. Now, C and D, each of them were given how many units or how many magazines to work on. 21 magazines and 30 magazines respectively. Per magazine, they were allowed to take 88 hours respectively. So the total time allowed is going to be 168 and 240 respectively. 21 into 8 and 30 into 8. Clear with this? But actual hours taken, this is given in the question as how much? 78 and 114. The hours saved is how much? 168 minus 78, it's going to be 90, and 240 minus 114, it's going to be 126 hours. Right? Now, look at this. Calculation of loss incurred due to incorrect rate selection, right? And in this case, how much they were supposed to pay? They were supposed to pay 60 rupees, but they have actually paid 65 rupees, which means 5 rupees they have paid more. On this 5 rupees alone, it is sufficient if you calculate the impact, because they're asking for the impact. No? Instead of doing the entire calculation for 65, once again doing it for 60, subtracting the 2, at the time of calculation itself, you can take only this 5 rupees because they've asked how much extra they are paying. Right? So now basic wages. So basic wages, how will you calculate? Actual time taken of 78 hours and 114 hours respectively into, ideally they should have paid 60, but they have paid 65, which means into 5 rupees extra they are paying. 78 into 5, 390 for C, and 114 into 5, 570 for D. If you add up the two, 960 rupee comes up. Now the bonus is as per Halsey. Under Halsey, how will you pay? Time saved, 50% into time saved into the excess rate we need to calculate, because we are only calculating the extra amount that we are paying. So 90 and 126 respectively. So here 50% of 90 into 5 rupees, 50% of 126 into 5 rupees. So it's 225 and 315 respectively. So excess wage paid to C is 615, to D is going to be 885. You add up the two, you get a total of how much? 1500. So currently, as per your Halsey plan, the company is paying 1500 rupees more than what they were supposed to pay. This is what they have said. Are you clear with this? Next, what is the amount of loss if Rowan was followed? If Rowan was followed, basic wages, no difference. 78 into 5, 114 into 5. These figures are the same, but the calculation of bonus alone will be different. How do you calculate bonus here? Time taken by time allowed into time saved into time rate. So here it's going to be 78 upon 168 into 90 into 5 rupees. That comes out to 208.95 or 208.93. All these figures are just now we did these figures here, right? These figures are all available here. So time taken by time allowed. So time taken by time allowed into time saved into time rate. So all these things are available here. We just need to plug and play. That's about it. Nothing great here. Fine. So now, yeah. Similarly, for D, how much is that going to be? It's going to be 114 upon 240 into 126 into the incremental extra 5 rupees that they are paying. It's going to be 299.25. So you add up the two. Under Rowan scheme, it's going to be, they are paying extra of 598.93, right? The incorrect amount, and 86 for C and 869.25 for D. You add up the two, you get 1468.18. That's the total amount they will be paying more if they were following. They are paying incorrectly if they were following Rowan scheme. Next, what are they asking? Right? calculation of the amount that could have been saved if if row 1 scheme was followed. Under row 1, the incorrect amount they are paying more is only 1468.18. Whereas if they were to follow HALSE, they are going to pay up how much? 1,500 rupees more. That's going to be the difference of 31.82. Nothing great. Wages paid under HALSE. So whatever was the figure that you found in the top, so 615,885, you just plug these figures here, 615,885, right? And wages paid under row 1, 598.93 and 869.25. You just plug these two figures here and total it up, right? The difference between these two, you arrive at 16.07 rupees. They are paying more, relatively more, right? And 15.75 rupees they are paying relatively more under row 1. Or in other words, I can say they have made a mistake. At least that mistake could have been saved by a total of 31.82 rupees had row 1 approach been followed. This is what they have asked. So why are we doing like this? Nothing great or no specific logic. This is the asking of the question. In the question, this is what they have asked, and hence we are also doing it like that. As simple as that. And with this, we have completed this particular question, which is on HALSE and row 1 under employee cost. Now, let's move on to the next question, which is question number 10. So this question is basically a blend of overheads with marginal costing. Now, look at the variety at which they are asking. They have linked the two chapters and they are asking fairly a simple sum, which you can crack it by yourself. Now, let me quickly read out the question for you. Han Limited sells 3 products, namely A, B, and C. The following information is available regarding the sales cost and activity for the year ended 31st of March, A, B, and C. The sales figures are given. The cost of sales figures are given, right? Then area of storage in terms of square feet, each of the product breakup is given. Similarly, the number of parcels sent for each of the product, the breakup is given. And the number of invoices sent for each of the product, the breakup is given. Selling and distribution overheads and the basis of allocation are as follows. Rent and insurance, 6 lakh rupees, and the manner of apportioning it between the products is going to be on the base of square feet, which means what? 6 lakh should be apportioned between the products in the proportion of 72,000 is to 1,08,000 is to 36,000. Fairly simple. Next, depreciation, 2,70,000. This has to be allocated to the products on the basis of parcel. So here we have the product wise number of parcels. That should be the manner of apportioning this particular depreciation. So why is the depreciation on the basis of parcel? Now it is given in the question. We are just doing it like that, as simple as that. Next, salesman's salary and expenses, 11,40,000 on the basis of sales volume. So sales volume here, sales is given in figures. So 60 is to 90 is to 54. That should be the basis of apportionment. And then admin wages and salaries, 9 lakh rupees in total. And to apportion it between the products, we are going to use number of invoices as the basis. Next, variable costs are given. So packing wages and material, 4.8 rupees per parcel. So number of parcels product wise we have, multiply that with 4.8. Commission 2.4% on sales. Product wise sales is that, directly apply 2.4%. And stationery is 1.8 per invoice. Product wise invoice, number of invoices is that, multiply it with 1.8. Fairly simple. Now, the finance manager of the company has recommended to discontinue product C since its sales is less compared to the other products. If you see between the 3 products A, B, and C, 60, 90, and 54. Since product C has a lower sale, let us discontinue. This is what the finance manager of the company is saying. Now, you are required to prepare a profitability statement for each product, showing the percentage of profit or loss on sales for each of the product, and also examine the recommendation of finance manager. So what we need to do is basically we need to arrive at the product wise profitability. Sales minus variable cost gives you contribution, minus fixed cost gives you what? Your profit. And then this profit, express it as a percentage of sale, and you will arrive at the profit margin as a percentage. And of course, now we will see whether product C is genuinely giving us a loss, right? So this is what we need to actually examine. Now, product wise, do we have the sales figure? Yes. Do we have the variable cost figures? Yes, these variable costs, they have given 4.8 per parcel. So product wise, parcels, sales, invoices, these details are there. So just multiply. Product wise, you can arrive at variable cost. Yes. Product wise, can you arrive at fixed cost? Fixed costs are given in total. The manner of apportionment, the bases are given, and these bases are readily available for each of the products. So you can easily apportion it and you can arrive at the product wise profitability. Are you clear with this? This apportionment concept is there in your overheads, but preparation of the income statement is there in marginal costing. They have blended the two and they have asked this question. Are you clear with this? Now, I feel, my gut feel, this is something that I've already told in one of my previous video as well. So what I feel is for this Jan 2025 exams, I feel that marginal costing will definitely come in that 10 mark case study based MCQ. It could be any question. This same question can also be tested as a case study based MCQ. We don't know, right? So somewhere I feel this chapter marginal costing, its presence is felt throughout this RTP. And of course, time and again, they are testing it in the MTPs, and also I feel that it is all set for your Jan 25 attempt. Nevertheless, now quickly, let's get started here. So profitability statement for each of the products. So product wise, so all you need to have is particulars, have a total column and ABC, or you can also have particulars, ABC, and finally total. That's absolutely your choice. Sales, this figure is given, right? This figure is given 60, 90 and 54, right? You can just total it up. It's going to be 204 lakhs. Now less all the variable costs. First one is going to be cost of sale. This figure is readily given. Figure wise, they have readily given it. Add it up, you get 135 lakhs. Right? Commission, they have given the commission. There are three more variable costs: commission, packing, wages and materials, and stationery. Right? So commission is going to be 2.4% of sale. So 2.4% on the respective sales value, you will get 1,44,000, 2,16,000, 129,600. You can add up the three, you will get 4,89,600. Right? Next, your packing wages, they have given it as 4.8 rupees per parcel. Right? So the parcel for each of the products ABC, A has a total of 2,40,000 parcels, B 3 lakh parcels, C 2,10,000 parcels. Respectively, multiply it with 4.8 rupees. It's a very clerical work. Quickly you can do it. You will get these figures: 11,52,000, 14,40,000, 10,08,000. Direct figures, right? Add up the three, you get a total of 36 lakhs. Similarly, the stationery, they have given it as 1.8 rupees per invoice. Number of invoices for A, B, and C: 60,000, 90,000, 1,44,000. Respectively, you multiply it with 1.8 rupees, you get 1,08,000, 1,62,000, and 2,59,200. You add up the three, you get a total of 5,29,200. As simple as that. So now you can total up all the variable costs. So this is the sum total of variable cost. Now sales minus total of variable cost gives you your contribution. So product wise, if you see, product A gives you a total contribution of 15,96,000. Product B, contribution itself is negative. Right? It is 6,18,000, and product C is 13,03,200. Ideally speaking, the problem is not with product C. Now itself we can arrive at the conclusion. Problem is with product B. Product B, its own variable cost itself, the selling price is not able to recover. There is some serious problem here in this particular product B. Right? Next, all the fixed costs, we can do it. Rent and insurance, the figure is given as 6 lakh rupees. Now this 6 lakh is a total figure. How do I apportion between the products? They have given the basis of apportionment, square feet. Product wise, do I have the square feet? Yes. 72,000 is to 1,08,000 is to 36,000, right? That is basically in the ratio of 2:3:1. So 6 lakh is going to be apportioned as 2 lakh, 3 lakh and 1 lakh. As simple as that. Next, depreciation, 2,70,000 rupees. Now the basis of allocation, they have given it as number of parcels. Product wise, they have parcels 2,40,000, 3 lakh and 2,10,000. So on the basis of 24 is to 30 is to 21, if you apportion, these are the three figures that you will be getting: 86,400, 1,08,000 and 75,600. Next, salesman salaries and expenses, 11,40,000. This 11,40,000 should be apportioned on the basis of what? Sales volume they have given. In units, sales is not there, but sales figures is there. It's 60 is to 90 is to 54. Product wise, we have the sales figure. If you apportion it, the figure that you will get is 335,294, 502,941 and 301,765. Right? And then finally, you have your admin wages and salaries, 9 lakh rupees in total. This is on the basis of number of invoices. Number of invoices is how much? That's going to be 60,000, 90,000 and 1,44,000. So if you apportion it on the basis of 60 is to 90 is to 144, you will get 183,674. 275,510 and 4,40,816. Right? So now you have the product wise fixed cost breakup. So the sum total of fixed cost comes out to 8,05,368, 11,86,451 and 9,18,181. You add up everything, you get 29,10,000. right? So now what you have, so the final profit is going to be contribution minus fixed cost. So product wise, if you see, product A has a total profit of 7,90,632. Product B, obviously the contribution itself is negative. Further you reduce fixed cost, it will be even more negative. It's going to be 18,04,451. And for product C, it's going to be 3,85,019. If you add up the three, overall the company is making a loss of 6,28,800. Now you express this profit or loss as a percentage of sale. So for product A, it's going to be 790,632 divided by 60 lakhs. So how much is that? 790,632 divided by 60 lakhs. That's going to be 13.1772 percentage. Roughly it's 13.18 percentage. Similarly, for product B, it's going to be negative 18,04,451 divided by 90 lakhs. That gives you a total of 20.05 percentage in negative, right? Because I am having this product line B, I am incurring a loss of how much? 20.05 percentage negative, right? That product line gives you a negative profit ratio. And finally, for product C, it's going to be 385,019 as a percentage of 54 lakhs. So that's going to be how much? It's going to be 7.13 percentage. Now here, mind you, you can't add these three figures. You can't add these three figures. Rather, I would suggest that better always you do this. You take this 6,28,800 divided by 2 crores and 4 lakhs. You get this as a negative 3.08 percentage. Are you clear with this? So now if you see, the problem is not with product C, whereas the problem is with product B. So now clearly we know that the finance manager is wrong. So you cannot stop here. You should write the recommendation of finance manager is not correct. Product C should not be discontinued as it is profitable. You don't say product B, you discontinue. You don't say anything about that. Just answer to the question. What does the question say? So the question is asking you, so you are required to examine the recommendation of finance manager. You just say finance manager is wrong. Why? Because product C has a positive profit. Are you clear with this? As simple as that. And with this particular question on overheads blended with marginal costing is also over. Now let's move on to the next question. This question number 11. This question is on cost sheet, right? And this is a question on multi-product cost sheet. Multi-product cost sheet. Basically, the company deals in more than one product, right? So in that case, how do you go about with the preparation of cost sheet? Now, this is ideally one question which we've done in our regular classes also. I gave an example of Kaju Katli, if you guys remember. Fine. So now let's get started with this question. IC Limited manufactures two types of phone cars. One is plastic phone car and the other one is silicone phone cover, right? The cost data relating to manufacturing of both the phone cars for the year ended 31st of March is given below. The direct material 1 crore rupees, direct wages 56 lakh, production overheads 32 lakh, and the total cost that they have given here is 188 lakh. Now, these figures are for plastic phone cover or silicone phone cover or for both put together. The answer is these are the costs pertaining to both the products put together, right? Now, the other information relating to the production of phone covers is as follows. Now, if they are asking you to prepare the product wise cost sheet, now you need to segregate each of these components for each of the products. Now, how do you go about with that? That is the reason why the other information is given. The direct material cost per unit of silicone phone cover was twice and that of plastic phone cover. Similarly, direct wages per unit of plastic phone cover were 60% of those for silicone phone cover. Production overhead per unit was the same rate for both the types of phone covers. Admin overheads being a part of cost of production, very important. This is admin overheads related to production, which means what? It is those 4 addition, 1 deletion. That component this will come in. It was a part of 50% of production overheads. Selling cost and selling price of silicone phone cover were 8 rupees and 140 rupees respectively. Number of units of silicone phone covers sold is 90,000. Number of units of production, silicone phone cover 1 lakh and plastic phone cover 3 lakh units. You are required to prepare a cost sheet for silicone phone cover showing the cost and profit per unit and total. Now, what are they asking? They are asking you to prepare the cost sheet only for silicone phone covers, right? So Plastic phone cover, can we prepare? The answer is no, you cannot prepare, because for plastic phone cover, they have not given how much is the total units sold, and they have not given the selling cost and all. So basically in this question, they have asked you to prepare the cost sheet only for silicone cover. Now have one thing in your mind. Now, is there any opening stock of FG for silicone? No, right? But how many units have been produced? So opening stock, nothing is there. Current year production, if you see, they have produced silicone phone cover 1 lakh units. They have produced 1 lakh units. Out of this, how many units have been sold? 90,000 units have been sold, which means what? 10,000 units are lying in closing stock. Please be very, very clear. This is something that you need to have in your mind before even you begin this question. Now you need to prepare the cost sheet. Format of cost sheet, you know that. However, these figures are all given in total. That is, these figures are pertaining to silicone plus plastic phone cover, but you need to segregate and find out the silicone components cost alone and prepare the cost sheet only for that. As simple as that, right? Now let's get started. Let's get started with this question. Now, preparation of cost sheet for silicone phone cover. The first thing that you need to have in your mind is units of silicone cover phone cover produced 1 lakh. However, how many units am I selling? 90,000, right? Clearly, this means that there is a closing stock of 10,000 units of silicone phone cover, and there is no opening stock since it is not given in the question. Now, what you need to do is first you prepare the format of cost sheet, particulars per unit and total. So now, particulars, the first one is going to be direct material cost, right? Then direct wages. Here, direct expense is not there. Subtotal, arrive at prime cost. Then add your POH. You get your, ideally you get your gross works cost. Now, opening WIP, closing WIP is not there. This becomes your net works cost, also known as factory cost. They have bypassed this. Then you have those 4 addition, 1 deletion. In that, one item is here, production overheads related to production. Administration overheads related to production. That particular line item, it's given in the question, no? Admin overheads being part of cost of production they have given, right? So hence that figure also comes in. You add it up, you get your cost of production. Add opening FG, it is not that. Less closing FG, it is there in this question, 10,000 units. Line item alone, you write it. First, let's prepare the format. Every figure we will work and we will do it, right? Less closing stock, right? You get your what? COGS, cost of goods sold. To this, add AOH, SOH. AOH is not there. AOH related to production that we've already considered here. Just add SOH, you get your cost of sales, right? To this, add your profit, you get your sales. Fine. The format of cost sheet, we are still sticking on to the format of cost sheet only. Now, let's go on to the first line item, direct materials. Now, read the question. What have they given? Direct material cost in total is 1 crore rupees. But what have they given? The direct material cost per unit of silicon is twice as much as your per unit material cost of plastic phone cover, right? Now, what we can do is, let us say the material cost per unit of plastic cover is M. Okay, the per unit cost of plastic phone cover is M. Then the per unit direct material cost of silicone cover will be twice M, that is 2M, correct? Yes. Now, so the total direct material cost will be what? 2M into 1 lakh. So the per unit material cost is 2M, and I am producing 1 lakh units of silicone phone cover. So 2M into 1 lakh, right? Plus M into 3 lakh. I am producing 3 lakh plastic phone covers, and the per unit material cost of plastic phone cover is M. M into 3 lakh. This will be the total material cost, right? This is equal to what? 1 crore rupees. So can I say 1 crore rupees is equal to 2 lakh M plus 3 lakh M, correct? 2 lakh M is nothing but what? That is going to be the total material cost incurred for your this one, silicone phone covers, 2M into 1 lakh. Right here, it's going to be 3 lakh into M, that's 3 lakh M. Are you clear with this? Now we have framed an equation, right? Now with this, we can calculate the M value. So 1 crore is equal to 2 lakh M plus 3 lakh M, right? So basically M is equal to, you add this is going to be 5 lakh M. So M is equal to 1 crore divided by 2 plus 3, 5 lakhs. 1 crore divided by 5 lakhs. So M is going to be 20 rupees. Or in other words, the direct material cost per unit of plastic phone cover is going to be 20 rupees. So the direct material cost per unit of silicone phone cover is going to be 2M. That's going to be 40 rupees. Are you clear with this? Right? So now with this, we have arrived at the figure. Just go up and update here. 40 rupees is going to be the cost per unit of silicone phone cover. 40 into 1 lakh rupees, that is going to be 40 lakh rupees. As simple as that. Next, direct wages. Now, what have they given in the question? In the question, they have given that the total direct wages is 56 lakhs. Perfect. Now, they have given the direct wages per unit of plastic phone cover is 60% as compared to your silicon phone cover. Now, what we will do is direct wages per unit of direct wage cost per unit of silicon phone cover, we will keep it as W, which means the direct wage cost per unit of plastic phone cover is going to be 0.6 of W. Correct? Right? And how many units of silicon phone covers we are manufacturing? 1 lakh. So can I say the total material cost equation will be W into 1 lakh plus 0.6 W into 3 lakh is going to be equal to 56 lakh. Correct? Right? So 1 lakh W plus 1,80,000 W is going to be 50 lakh. So 1 lakh plus 1,80,000, it's going to be 2,80,000. So W is going to be 56 lakh divided by 2,80,000. Once again, the wage cost per unit of what? Per unit of silicon phone cover is going to be 20. Are you clear with this? Then for plastic, we need not calculate because it is not asked in the question only. So directly what you can do is you can just go up and update it here. So 20 rupees is the per unit cost of the direct wage cost per unit of silicon phone cover. So 20 into 1 lakh units, that's going to be 20 lakh rupees. You add up the two, 60 and 60 lakh rupees is going to be the total prime cost. The next one, the production overhead per unit was at the same rate for both the types of phone covers. So now how will you do this? How will you do this? Now, very simple. In this case, what they have done, the per unit overhead cost for both the products is going to be the same. This is what they have said, which means what? The per unit rate of overheads is going to be common for both the products, right? So how many units of silicon phone cover we have manufactured? 1 lakh. How many units of plastic phone cover we have manufactured? 4 lakh. So 3 lakhs. 1 plus 3 is going to be 4 lakh rupees, 4 lakh units, right? So the total production overhead is 32 lakhs. 32 lakhs divided by 4 lakhs, that is going to be how much? 8 rupees per unit. Whether it is for your silicon phone cover or it is for your plastic phone cover, the overhead cost per unit that I'm going to give is going to be 8 rupees. So what is the total number of silicon phone covers manufactured? 1 lakh. 8 into 1 lakh, it's going to be 8 lakh rupees. So you can just go up and update it here. It's going to be 8 per unit and 8 lakh in total, right? If you add it up, you get the factory cost. 60 plus 8 is 68. 60 plus 8 is once again 68 lakhs. Fine. Then what have they asked for? Admin overheads being a part of cost of production was 50% of production overheads. Very simple. You just take, you have the figure here, 8 lakh, 50% of 8 lakh is 4 lakh rupees. 50% of 8 rupees is going to be 4 rupees. Are you clear with this? Subtotal it, you get 72 rupees per unit and 72 lakh in total. Now you have your closing stock. So how many units of closing stock is there? 10,000 units of closing stock is there. And every unit of closing stock should be valued at what? Cost of production. So 10,000 into 72 rupees. Cost of production, we have it here, 72 rupees. You put it here, 10,000 into 72. That's going to be how much? 7,20,000. So it's a closing stock. It needs to go on to reduce it. So now you have a final COGS of how much? 64,80,000. Of course, the per unit cost remains to be 72 rupees only. Now, the next one, what have they given here? The selling cost per unit of silicon phone cover is 8 rupees, right? Be very, very careful. Selling cost is incurred per unit sold, not per unit produced. Are you clear with this? So here what you need to do is 8 into 90,000 units. You need to put it here. So 9 into 8 is going to be 7,20,000. You add it up, you get what? A total cost of 80 rupees per unit and 72 lakhs is the total cost of sales. Now you have the total sales value. They have given in the question that the selling price per unit is going to be 140 rupees. 140 into 90,000, that gives you how much? 1 crore and 26 lakhs is going to be the total sales value. Per unit, the selling price is 140 given in the question. So now profit is going to be the balancing figure. 126 lakhs minus 72 lakhs, that gives you 54 lakhs, right? And 140 selling price minus cost of sales of 80, that gives you 60 rupees per unit. That's the profit. Are you clear with this? As simple as that. It's a very, very simple question, but it's a multi-product cost sheet scenario. Now, the same sum can also be solved in a slightly different way. In fact, in a regular batch, I would have solved it in a different approach called as, the weighted, the weighted ratios. So you have a consumption ratio, you have a production ratio, multiply the two, you get the weighted ratio and you can apportion it. That's another way of doing it. Fine. This is how in the RTP they have solved both the questions. Both the approaches will lead you to the same solution. You can follow that or you can also follow this approach. Are you clear with this? Fine. So with this, the sum on cost sheet is also over. Now let's move on to the next question, which is question number 12. So this question is from the chapter cost accounting systems, and this question is on your reconciliation statement. Now, fairly a simple question again. Now, the following information is extracted as a result of scrutiny of the figures from both financial accounts and cost accounts of CK Limited, the year ending 31st of March. Net profit as per cost accounts is given. The figures are given. Under recovery of selling overheads and cost accounts, under valuation of closing stock and cost accounts, rent received credited in financial accounts, bad debts provided in financial accounts, income tax provided in financial accounts, under recovery of admin overheads in cost accounts. So these are the adjustments that are given. You are required to prepare a statement of reconciliation showing the profit as per financial record. Now, how do we go about with this? First of all, you need to understand in cost accounts, all the overheads that gets charged is only the absorbed overheads. Whereas in your financial accounts, the overhead that hits your P&L is going to be actuals, right? So now they have given us the profit as per cost accounts. They are asking us to find out the profit as per what? Your financial accounts. Clear with this, right? So profit as per cost accounts is there, right? And you need to arrive at the profit as per financial accounts, right? Now, how do we go about with this? How do we go about with this? The first thing, now, first net profit. So we know the format of reconciliation statement. Obviously, in this case, the starting point needs to be what? Your net profit as per costing records, right? Now, quickly, let me just walk you through this. Now, first of all, let's read line item wise. I've told you, you read line item wise, prepare the statement. So profit as per cost accounts, add, you leave a few lines, less, you leave a few lines. As and when you read a particular adjustment, you go and plug it there. Now, what have they mentioned? First, under recovery of selling overheads in cost accounts. Now, as per in cost accounts, the absorbed overheads is less, under absorbed, under recovery, right? Whereas the actual overheads is more, right? Which means in your financial accounts, you only account for the actuals. The debit side item actual is more. So if the debit is more in financial account, it will reduce your financial profit, correct? So this item needs to be subtracted. Are you clear with this? So your absorbed overheads is actually less as compared to the actual overheads. Overheads is a debit item, right? More the debit item in financial accounts, lesser will be the profit. So from costing profit, if you want to reach your financial profit, in this case, this adjustment needs to be subtracted. Are you clear with this? Next one. Undervaluation of closing stock in cost accounts. Now, what happens here? In costing, this particular closing stock is being undervalued, right? So in costing, it's a your closing stock is a credit item. So in costing, your credit item is less as compared to your financial profit. So right now you are in a lesser state. You need to reach a higher figure. You need to add this figure. Are you clear with this? So undervaluation of closing stock. So the credit is lesser in cost accounts, but we need to reach the financial accounts, add it to reconcile. Are you clear with this? The next one. Rent received credited in financial accounts. So rent received is a non-operating expense, non-operating income, right? So is it considered in costing profit? No, but in financial profit, it needs to be considered. So now how do you do this? It's a credit item. You need to add this. Are you clear with this? Next. Bad debts provided in financial accounts. So in cost accounts, bad debts has not been considered, but this item is a debit item in your financial accounts. So from costing profit, if you want to reach your financial profit, this item needs to be further debited or further reduced. So this is a less item. Income tax provided in financial accounts, the same thing. It is not provided in costing, but it's a debit item in your financial accounts. It needs to be reduced in order to arrive at your financial profit. Next, under recovery of admin overheads in cost account. This is similar to under recovery of selling overheads. So your absorbed overheads is actually less in cost account. That is, as of now, you have only debited less in cost account, but actual overheads is much more, which means the debit is more in your financial accounts. The debit is more in financial accounts means what? Your financial profit is lesser as compared to the costing profit. So from costing profit, if you want to reach your financial profit, this item needs to be subtracted. Are you clear with this? And as simple as that. So there are 4 deletions and 2 additions, and that's about your reconciliation statement. Now look at this. Net profit as per cost accounts, right? two additions alone. That is undervaluation of closing stock that I told you, and then your rent received credited in your financial accounts. So these two items, look, these two items are the only additions. The remaining are all deletions. Under recovery of selling overheads, bad debts provision in financial accounts, income tax provision in financial accounts, under recovery of admin overheads and all. So you subtract all these figures, you arrive at your profit as per financial accounts, which comes out to 54,49,440. As simple as that, right? And with that, this question number 12 is also done. Now let's move on to the next question. This question number 13. Now this is a question on batch costing, a very similar question that is there in our institute study material. Phonic Limited accepted an order to supply 2,000 units per month of product E for the third quarter of the year. Each monthly batch order records the actual costs of material and labor, and overheads are charged at a rate per labor hour, right? Obviously, we know that prime costs are valued at actuals, and of course, overheads costs are charged at absorption basis. Perfect. The selling price is established at the rate of ₹15 per unit. Then the information relating to material, labor, and overheads is provided below. Now, October, November, December, each of the 3 months, batch output 2,500 units, 3,000 units, 2,000 units. Batch output is given. Material costs for each of these 3 months is given. Labor costs for each of these 3 months is given. Overheads is also given, 24,000, 18,000, 30,000, and the total labor hours are also given, 8,000, 9,000, and 10,000. Now, remember one thing, overheads is not charged as the actuals, right? What you need to do here, since they have given overheads are charged at the rate per labor hour, what you need to know, you need to calculate the absorption rate. So it's very easy. You can have one more column here, and you can even do it here itself. Absorption rate, how much is this? 24,000 divided by 8,000. So how much is that going to be? That's going to be 3 rupees, right? Fine. 8,000 divided by 9,000. So in the month of November, the absorption rate is 2 rupees, and 30,000 rupees divided by 10,000 hours is going to be what? Rupees 3 rupees again. These are all absorption rate per labor hour, right? This is the absorption rate per labor hour. Now, ideally speaking, these two are budgeted data, right? Because we always use only the predetermined rate, correct? Now, this absorption rate, you need to multiply it with the actual labor hours to arrive at the absorbed overheads. Now, that is the reason they have given one more data here. The labor is paid at the rate of 2 rupees per hour. Now, you have the labor cost, you have the rate of labor also. So, can I say labor cost is equal to the rate at which I am paying, 2 rupees per hour into the number of labor hours, correct? No, number of labor hours, right? Fine. Or in other words, can I say the number of labor hours is equal to labor cost divided by the rate, that is 2 rupees here. Yes or no? Fine. Now, in each of these 3 months, I know the labor cost, and I know that the labor rate, hourly rate, is only 2 rupees. So if I divide this 2, I will get the actual number of labor hours, right, for each of the quarters. Right? To this, I will multiply the respective absorption rate. We will also get the absorbed production overheads month-wise. As simple as that. Are you clear with this? So, for example, for the month of October, so the labor hours is going to be how much? 5,000 divided by 2, 2,500 hours. Similarly, November, 6,000 divided by 2, 3,000 hours. For December, 4,000 divided by 2, a total of 2,000 hours were worked. Correct? So how much is going to be the absorbed overheads? So can I say the absorbed production overheads is going to be 2,500 into 3 rupees. So for the month of October, the absorbed overheads is going to be how much? 7,500 rupees. Right? Similarly, for the month of November, it's going to be how much? 3,000 hours. Each hour I need to charge it at the rate of 2 rupees, 6,000 rupees. And here, the month of December, it's 2,000 into 3. Once again, it's going to be 6,000 rupees. Are you clear with this? Right? As simple as that. So now, month-wise, you have the material, labor in actuals and overheads absorbed also. Fine, you can go ahead and do. Calculate the cost and the profit per unit of each batch order along with the overall position for 6,000 units, right? So month-wise, you can calculate the cost per unit and the profit per unit. And then they are asking you, calculate the overall position for 6,000 units. Suppose they are manufacturing and selling 6,000 units, right? For that, what is going to be the position? Very, very simple. Are you clear with this? In fact, we have solved this question at the time of reading itself. It's very simple. Now, quickly, look at this. Month wise, they have given October, November, and December 2,500 units, 3,000 units, 2,000 units. Add up, you'll get a total of 7,500 units. Sales value, the rate of 15 rupees, it's given. Multiply the respective units with 15 rupees, you'll get the sales value also. Now, cost data, material and wages. If you see for the month of October, how much is material cost? 12,500. How much is wages cost? 5,000. Similarly, for the month of November, material 18,000, labor is 6,000. Similarly, in the month of December, it's going to be 10,000 rupees of material cost and 4,000 rupees of labor cost, of wages cost. Are you clear with this? These are all actuals. You can just total it up. Now, overheads alone, you can't take the figures because the last two columns are budgeted. You need to calculate the predetermined rate, multiply it with the actual number of hours worked. That is the working note all about. So you can just come down and you can just see here. Now look at this. First step is to what? Calculate the labor hours. How do you calculate the labor hours? Labor cost divided by the labor rate per hour. So you get the labor hours. We calculated this 2,500, 3,000 and 2,000, right? And then overhead cost per hour. This is basically your absorption rate. To be more specific, this is nothing but your predetermined rate. It's going to be how much? 3 rupees, 2 rupees and 3 rupees. So now overhead rate for each of the month is going to be how much? 7,500, 6,000 and 6,000. This is exactly what we calculated here. 7,500, 6,000 and 6,000. Are you clear with this, guys? Very, very simple. So you can just go up and update it here. So 7,500, 6,000, 6,000, and you can also total it up as 90,500. So the total cost is going to be 25,000 for October, 30,000 for November, and 20,000 for December. Add it up, you get 75,000 in total. The profit per batch is going to be 37,500 minus 25,000. It's 12,500. 45,000 minus 30,000, it's going to be 15, and 30 minus 20, it's going to be 10. You can add it up and you'll arrive at 37,500. So now what's going to be the cost per unit? So now the respective month you can take here, the total cost 25,000 is the cost for 2,500 units. You divide that, you get 10 rupees. 15,000 upon 3,000, sorry, once again, 30,000 divided by 3,000, you get 10 rupees. 20,000 divided by 2,000, you get 10 rupees. Similarly, the profit per unit for each of the batches, 12,500 divided by 2,500, you get 5 rupees. 15,000 upon 3,000, 5 rupees, and 10,000 upon 2,000, you get 5 rupees. Are you clear with this? Month wise, we have prepared the batch cost sheet, and now they've asked, suppose if the company is taking up an order of 6,000 units, what will be the sales value? 6,000 into 15, 90,000 rupees. What will be the total cost? 6,000 into 10 rupees. This is the cost per unit. It's going to be 60,000 rupees. And what's going to be the profit? You reduce it to, you get 30,000 rupees. Are you clear with this? Fairly a straightforward sum. And that's about this particular question in your batch costing. Now let's move on to the next question on joint and byproducts. Now, JPBP Limited manufactures two joint products A and B simultaneously from the very same process. The process produces another product C, which is recovered incidentally from the material used in the manufacture of A and B. The expenditures incurred up to the point of separation, that is the split off point, are rupees 14,82,000. As the joint products are capable of being measured in the same units, the joint costs are allocated on the basis of physical units. So the manner of apportionment of joint costs is going to be your physical units method. Though the joint products A and B are saleable at the split off point, these can also be further processed and sold at a higher market price with some sales promotion efforts. However, product C can be sold only after further processing. Perfect. The management is of the view that as the net realizable value of product C at the split off point is too small, the value may be deducted from the joint production cost. So which means what? So there are three products A, B and C. Out of this, product C is what? A byproduct, right? So byproduct, what you need to do? So you need to arrive at the NRV of the byproduct. This NRV needs to be subtracted from the overall joint cost, and the net joint cost should be apportioned between the joint products A and B. The manner of apportion should be what? Using physical units method. Very simple. I have just summarized whatever we have read till now. Going forward, the relevant details of the products are as follows. So each of the three products, how much is the output is given in the question. The selling price at the split off point for A and B, they have given. C, they have told very clearly it cannot be sold at the split off point. Perfect. Further processing cost A, B and C, it's given. Further marketing cost A, B and C is also given. And selling price after further processing, the final sales value for all the three products they have given. Mind you, product C is a byproduct. Clear with this? And A and B are joint products. Are you clear with this? Fine. Now, what have they asked for? You are required the following. Number one, determine the profit or loss of each of the joint products if they are sold without further processing. Means what? They are asking you to calculate the profit or loss if the byproducts are sold at the split off point. Are you clear with this? That's the first part of the question. Second, whether the joint products should be further processed or not. Decide on the basis of incremental profit or loss. So the second part of the question is decision making. First part of the question is going to be your profit computation. Are you clear with this? Perfect. Now first, let's do the first part of the question. So now approach the solution. What you need to do, as I just told you, you take the byproduct first, right? So what is the final selling price of byproduct? 24 rupees, right? So from this 24 rupees, this is the final sales value of product C. For you to actually get the sale value, you need to incur a further processing cost of 8 rupees and further marketing cost of 4 rupees, right? So 8 plus 4 is 12 rupees. You reduce this 12. So technically speaking, the NRV that you get from your byproduct C is going to be 12 rupees per unit, right? So how many units of product C I'm manufacturing? 1625, not units, it's in kgs. So 1625 into 12, how much is that going to be? Rupees 19,500 rupees is the net realizable value that I get from what? Product C. So now what do we need to do? We have the total amount of joint cost, 14,82,000, right? So 14,82,000. From this, I need to subtract what? I need to subtract rupees 19,500, which is going to be the NRV that we get from product C. So the net amount is going to be how much? The net amount is going to be rupees 14,62,500 rupees. Are you clear with this? 14,62,500 rupees. 1 second. Yes, 14,62,500 rupees. This is the joint cost apportionable between the two products A and B. So I will apportion this 14,62,500 rupees between A and B using physical units method, or in the proportion of 16,250 is to 8,125. Are you clear with this? As simple as that. And once you do that, now product wise you get a share of what? You get a share of joint cost. So now what you need to do, sale value at split off point product wise less its share of joint cost, you will arrive at your profit if the products are sold at the split off point. As simple as that, guys. Very, very simple. Now quickly, let me just walk you through the solution. Product C is produced incidentally from the material used manufacture of A and B, thus it's a byproduct. So what you need to do, selling price after further processing, 24 minus 8 minus 4, that gives you 12 rupees, right? And then what you need to do is 1625 kgs. Each of these kgs will give you a net realizable value of 12 rupees. That's going to be a total of 19,500 rupees, right? So now what you need to do, so from 14,82,000 rupees, which is your total joint cost, you reduce this 19,500 rupees. It's going to be how much? Rupees 14,62,500 rupees, right? This needs to be apportioned between A and B in what units? Physical units method. 16,250 units is to 8,125 units, or basically these two are in kgs. Okay, so 16,250, I am erasing and I am putting it here. 16,250 kgs is to 8,125. So 16,250 plus 8,125 gives you how much? A total of 24,375, right? So which means A's share of cost is going to be how much? 14,62,500, right, into 16,250 divided by 24,375, you get how much? Rupees 9,75,000. B's share is going to be how much? 14,62,500 into 8,125 divided by 24,375. That's what they have done. 8,125 divided by 24,375. You get B's share of how much? 4,87,500. Are you clear with this? Fairly a simple sum. So now what you need to do is statement of P&L if the joint products are sold without further processing, meaning at the split off point. So output 16,250 and 8,125, right? So now sale value at the split off point, these two figures are also given, 72 and 80 respectively. You marry the two figures, you multiply the two figures. Sales value is 11,70,000 for A, 6,50,000 for B. You add up the two, you get a total of 18,20,000, right? Less allocation of joint cost. We just found out these two figures. It's going to be how much? 9,75,000 and 4,87,500. If you add up the two, you get how much? 14,62,500. This is the figure that I had mentioned. 14,62,500. This is nothing but what? 14,82,000 minus the NRV from byproduct of 19,500. Clear with this, guys? right? So once you do that, you get your product wise allocation of joint cost. So sales value at the split off point minus the allocated joint cost, you get the profit at the split off point product wise. It's going to be 1,95,000, 162,500. You add up the two, you get a total of 3,57,500. And with that, part one is over, right? Now let's go on to part two of the question. Now, what have they asked? This part is regarding only product A and product B. What is it? Should I further process or not? Now, read the question here. Should I further process or not? Now, I am erasing all of this. I'm erasing all of this. Now, if you see, for the purpose of further process or not decision, right, the joint cost is irrelevant. Why? Now, I have a joint process out of which A and B has come. C has also come. Forget it. A and B has come out. The question is, having made the joint process, should I sell it immediately or should I further process and sell it? Which means the joint process is already over. Should I sell it now or later on after further processing? So for the purpose of this decision, I am taking this decision after the joint process is over. So which means the joint cost is already incurred. You can't go and reverse it. It's a sunk cost. Are you clear with this? So for the purpose of further process or not decision, we have seen that your joint cost is irrelevant. So now what do you do? If I sell it right now, let's take product A, similar case for product B. If I sell it right now, how much will I get? 72 rupees. If I further process and sell it, how much will I be getting? 112 rupees, right? So here, how much extra revenue am I able to generate if I further process? Extra revenue is going to be 40 rupees. Now, for me to get this 40 rupees more, how much extra should I incur? You need to incur a further processing cost of 16 rupees and further marketing cost of 8 rupees. So 16 plus 8, how much is it? I need to incur a further extra cost, incremental cost of 24 rupees. So if I incur extra 24, I will get extra 40 rupees. On a per unit level, what is the incremental profit that I will be able to generate? 16 rupees for every kg further process I will be able to generate. Now you tell me, should I sell product A at the split off point or should I further process and sell it? In this case for product A, it makes sense for you to further process and sell. Why? Because your incremental revenue is greater than the incremental cost, resulting in your incremental profit. Are you clear with this? In this case, it makes absolute sense. So 16 rupees per unit, I'm going to make a profit, and into 16,250, that's going to be your extra total profit. For product B, if you see, if I sell it right now, I get 80 rupees. If I further process and sell it, I'll be getting 104 rupees. So what is the incremental revenue that you get? 24 rupees. For you to earn this extra revenue of 24 rupees, how much should you spend? 20 rupees further processing cost, for 8 rupees further marketing cost. So 20 plus 8, you need to incur a total of how much? You need to incur a total of 28 rupees, which means for product B, if you further process, for every unit you are further processing and selling, you are incurring a loss of 4 rupees. Now you tell me, will you voluntarily go and incur a loss of 4 rupees for every unit further process? Absolutely not. So for product B, it makes sense to sell it at the split off point itself. Now for you to arrive at this decision, your joint cost was completely irrelevant. Are you clear with this? Right? This is exactly what they have presented here also. Selling price at the split off point 72, after further processing 112, incremental revenue is how much? 40. Further processing cost, further marketing cost 16 plus 8, 24 rupees the incremental cost. Incremental profit is going to be 40 minus 24 is going to be 16 rupees, right? And 16 into 16,250, you get an incremental profit of how much? 2,60,000 rupees. Product A makes sense to further process. Product B, currently, what is the selling price? At split off point 80, split off point, your selling price after further processing is going to be 104. The incremental revenue is going to be how much? Sorry, the selling price after further processing is correct, 104. Incremental revenue is 24 rupees, but the further processing cost is 20, further marketing cost is 8. Incremental cost is going to be 28 rupees. So 24 minus 28, you will incur a loss. Incremental loss is going to be 4 rupees. So 4 into 8125. If you go ahead and if you further process your product B, incrementally you are going to incur a loss of 30 to 500. Why do you want to do that? You sell B at split off point, but you further process and sell product A alone. Therefore, product A should be processed further as they give an incremental profit. On the other hand, product B should be sold at the split off point as they suffer an incremental loss after further processing. Are you clear with this? That's it about this particular question. Now let's move on to the next question, which is question number 15. And this question is on service costing. A good question. And once again, this question is very similar to the one which is there in our institute study material. Now let me read out the question for you. Roshan Travels provides a bus facility to a college for carrying its students from home to college and dropping them back at home after study hours. The travel company runs a fleet of 6 buses for this purpose and park them in the college premises. The information regarding bus running is as follows. The college operates in 2 shifts, one in morning and one in the afternoon, right? So morning college and afternoon college is there. The distance traveled by each bus one way is 20 kilometers. Students need to attend the college for 30 days in a month. The seating capacity of each bus is 30 persons and the seating capacity is normally 80%. That is 80% is occupancy. 80% is occupied throughout the year, which means what? The bus has a capacity of 30, carrying 30 students, right? And on an average at any given point of time, only 80% of the capacity is filled. So 30 into 0.8, ideally speaking, the bus only transports 24 students. One bus transports 24 students at a time. Are you clear with this? Next, the information regarding the expenses incurred for the year is as follows. Driver and attender salary 60,000 rupees per bus per month. Be very careful with these wordings. This is where the students make mistakes. Cleaner's salary, one cleaner is required for 2 buses, 30,000 rupees per cleaner per month, which means this 30,000 rupees is a cost for 2 buses per month. Ideally speaking, per bus the cleaner cost is only going to be 15,000 rupees. Clear with this? Next, diesel average 8 kilometers per liter. So the mileage is 8 kilometers. Excellent bus it seems, because even my car gives only more or less this much. Okay, 160 rupees per liter. Okay, so looks like this is a very futuristic sum. Already the diesel rates are very high. 100 rupees, somewhere around 100. Now it's 160 is what they've given. Next, insurance charges per annum 2% of the purchase price. Perfect. License fees and taxes 10,160 per bus per month. Parking charges paid is 36,000 rupees per month. Repairs and maintenance, including engine oil and lubricants, for every 5,760 kilometers, they incur a cost of 5,712. Right? So what you need to do, you need to take the total kilometers that divided by 5,760 into 5,712. Are you clear with this? That's how you need to calculate. Nevertheless, we will do other calculations. Purchase price of each bus is 30 lakhs. Residual value of each bus is 8 years. Scrap value per bus at the end of the residual life is going to be 6 lakh rupees. So how do you calculate the depreciation? So 30 lakhs minus 6 lakhs is going to be 24 lakhs, right? And 24 upon 8, that's going to give you 3 lakh rupees. So 3 lakh rupees is going to be the annual depreciation per month. I mean, per bus, right? Per annum. Now, the next one. Students coming from a distance of beyond 10 kilometers away from this college are charged double the fare than the students coming from a distance of up to 10 kilometers. Perfect. So then you have the concept of equivalent students and all, right? Fine. Then 50% of the students traveling in each trip are coming from a distance beyond 10 kilometers from the school, and the charges are to be based on average cost. Perfect. Right. Now, you are required to, number 1, prepare a statement showing expenses of operating a single bus for a year. So first you need to prepare a statement showing what? So what is the total cost of operating one bus per annum? Next one, calculate the average cost per student per month in respect of the students coming from a distance up to 10 kilometers and beyond 10 kilometers. Perfect, right? So now let's get started with this. Now, in all the service costing sums, right? So basically you need to take the total cost, right? And denominator, you need to arrive at the total number of units. In this case, it's going to be the total equivalent students. Since half fare students and full fare students are there, you can consider equivalent half fare students, or you can also do it as per equivalent full fare students. Absolutely no problem. Now in the numerator, it's very simple. Compile the total cost, but institute expects you to present it in a certain way. The total cost, you cannot do it randomly. They are asking you to bifurcate the costs into 3: standing charges, maintenance charges, and operating charges. Standing charges generally is referred to fixed cost. Operating charges is nothing but your variable cost, and maintenance charges, it's a hybrid. It's basically a semi-variable cost. That's why they have a separate header for that. Are you clear with this? This is so why like this, sir? If I don't classify it, will the answer be the same? Absolutely, your answer will be the same. It's just a manner of presentation that is being asked. Now, line item wise, let's quickly do it. Standing charges. The first one, driver, attender, and driver and attendant salary. They have given 60,000 rupees per bus per month. Per annum, it's going to be 60,000 into 12. So into 12, you get how much? 7,20,000 rupees. Next, cleaner salary. How much is it? 30,000 per month, but they have given one cleaner for what? Two buses. So it's going to be what? 30,000 into 50%, or you can do into 1 by 2 into what? So into 12 months, right? So 30,000 into 1 by 2 into 12 months, it gives you how much? 1,80,000 per bus per annum. Next, diesel charges, that comes under your variable operating cost. Next, insurance charges, it's given per annum 2% of the purchase price, right? So what is going to be your purchase price? It's given in the question as 30 lakh rupees. So 30 lakh into 2% is going to be how much? That's going to be 60,000 rupees per annum. You can directly plug it in here. Next, license fees and taxes, it's going to be 10,160 per bus per month. You multiply it into 12, you get 121,920. Perfect. Next, average parking charges, 36,000 rupees per month. Given in the question, into 12, you get how much? So I think, once again, sorry. So now, yeah. So now parking charges. So what is given here? 36,000 per month is given here. So how much is the total parking charges? 36,000. Okay, so it's going to be 36,000 into 12. How much is that going to be? 4,32,000. Now, if you read the question carefully, they have not given per bus. It means what? This 4,32,000 is the total parking cost for all the 6 buses put together. So you divide it by 6. How much you get? You get how much? 72,000 rupees, right? That's how they have arrived at the parking charges. Are you clear with this? Next one. Depreciation, we calculated already. 30 lakhs minus 6 lakh, 24 lakh. 24 lakh upon 8 lakh, that's going to be 3 lakh rupees per bus per annum. That can also be filled in. Next one, guys. So next one is going to be your maintenance, repairs and maintenance, and your diesel charges. For you to compute this, you first need to know how much is the total kilometers traveled by every single bus, right? So now that comes, so for that we need to calculate the total distance. So how will you compute the total distance? Now they have given each bus is traveling a total distance of 20 kilometers one way, right? So 20 kilometers is a one-way distance into 2. So one round trip will be having what? 20,000 kilometers into 2. Now the college, every bus, right, operates on both the shifts, college shift, morning shift as well as afternoon shift, correct? In the morning, what it does? So from the college, it starts, goes, it picks up and comes back, right? And for the same morning batch students only, once again, it will go, drop them and come back, right? Similarly, for the afternoon batch, it will go, pick them up and it will once again come to the college, and once again it will have to go and drop them back, which means in a day it makes 4 round trips, 2 trips for the morning students and 2 trips for the afternoon students. So can I say into 4 trips a day, correct? Right? Like that, there are 30 days in a year, and like that there are 12 months. There are 30 days in a month and there are 12 months in a year. So 20 kilometers is a one-way trip, right? Into 2 round trips, that makes it 1 round trip. 20 into 2 is 40 kilometers per round trip. Like that, 4 round trips are made, 2 for morning students and 2 for afternoon students. That's why into 4. Like that, there are 30 days in a month and 12 months in a year. If you calculate, it's going to be 20 into 2 into 4 into 30 into 12. That's going to be how much? 57,600 kilometers in a year. Are you clear? This is going to be the total distance traveled by one bus, right, every year. Now they have given that repairs and maintenance 5760 kilometers. The cost is going to be rupees 5712 for how many kilometers? 5760 kilometers, right? So for 57,600 kilometers, what is going to be the total cost? Very simple. 57,600 into 5712 divided by 5760, right? So 57,600 into 5712 divided by 5760, it means the total cost is going to be 57,120 rupees per annum. You can just go and fill it up here. So 57,120 rupees per annum is the cost. The last one is going to be your diesel cost. Diesel cost they have given, the mileage is going to be 8 kilometers per liter and the cost is going to be 160 rupees. So what is the meaning of that? So basically what is going to be the cost? So I incur a cost of 160 rupees for every 8 kilometers run. So what is going to be the total cost for me to run 57,600 kilometers? Are you clear with this? So how would you do that? So 57,600 into 160 divided by 8. So 57,600 into 160 divided by 8, the total diesel cost alone comes out to 11,52,000. So you can just put it up here. It's going to be 11,52,000. So the total cost is going to be 26,63,040. So that's going to be the annual cost. You divide it by 12. So the per month cost of operating one bus is going to be how much? 2,21,920. Are you clear with this? Fine. So that's about the total cost aspect. Now, what have they asked in this question? Look at this. What have they asked? That's the first part of the question, right? Per annum we have done and divided by per month also we have done it. Look at this. Second part, calculate the average cost per student per month in respect of students coming up to 10 kilometers and students coming from beyond 10 kilometers. Now, be very, very careful here. This is one area where I've seen many students make a mistake. Now, look at this. Look at this. In every bus, let's take one bus, right? So now we need to recover the cost incurred for one bus from the students who are utilizing every bus, correct or not? Yes. Now, every bus has a capacity of carrying 30 students, right? But what happens? Only 80% of the capacity is being occupied, which means what? On an average, only physically 24 students only are utilizing the bus, correct? Yes. Now, which means 24 students in the morning batch. Once again, a different set of 24 students in the afternoon batch. Have that in your mind, right? Which means they have given in the question that half the students, 50% of the students are traveling only for up to 10 kilometers and the remaining are traveling beyond 10 kilometers. Or in other words, out of this 24 students, 12 students are full ticket students, full fare students, and 12 students are half fare students, right? In the morning batch alone. Similarly, in the afternoon batch, another 24 students are coming, right? And out of them, 12 students are full ticket and 12 students are half ticket. Are you clear with this? Right? Fine. This alone, you have it in your mind. Now, what we are trying to do is we are converting every student into equivalent half ticket student, half fare student. So now you tell me, in the morning batch alone, we'll take how many full fare students are there? How many half fare students are there? 12 full fare students are there and 12 half fare students are there. Correct? Now, can I add 12 plus 12 directly for the purpose of apportioning the cost? No. Why? Because these full fare students, I recover them twice as compared to half fare students. Or can I say one full fare student is equivalent to two half fare students? Yes. So, can I say this 12 full fare students is equivalent to 24 half fare students? Are you clear with this? So, what I do is first I convert and calculate equivalent full fare students is how much? 24 students. Right? Plus, how many half fare students are there? Half fare students, 12 students. So this full fare students, I have converted and calculated equivalent half fare students is 24 plus 12. It's going to be 36, which means in the morning batch alone, there are 36 equivalent half fare students. Are you clear with this? But the total cost per bus has to be shared by both the morning batch students as well as the afternoon batch students. So similarly like this, one more 36 equivalent half fare students are there in the afternoon batch, which means the total equivalent number of students, both morning plus afternoon put together, equivalent half fare students in total is going to be how much? 72 students. Are you clear with this? Are you clear with this? Right? So now what I need to do, this monthly cost of 2,21,920, I need to recover it from 72 equivalent half fare students. So which means the cost per half fare student is how much? 3,082.22. So 2,21,920 divided by 72, that gives you 3,082.22. Are you clear with this? Which means from a full fare student, how much should I recover? It's going to be 3,082.22 into 2. That's going to be 6,1. Are you clear? As simple as that, guys. Very, very simple. But generally, students make a mistake in converting this into equivalent half fare or equivalent full fare. Sir, can I also convert this into equivalent full fare? So what you can do is you can also do the sum. But here what they have done, considering half fare as the base, they have converted even the full ticket students into half ticket students. What you can do is you can convert the half ticket students into full ticket students. How you do? Instead of multiplying the full ticket with 2, you can multiply the half ticket students with 0.5. You will get the same answer and all. Nothing to worry about that. Are you clear with this? Right? And that's about this particular numerical problem on your service costing chapter. Now mark the sum as very important, because in this sum you have literally everything. The format of service cost sheet that institute is expecting, that is number 1. Number 2, the concept of equivalent students and on equivalent service cost unit. This is also there in the sum. And of course, this goes without saying, the kilometer, the total distance calculation. These are generally the 3 places where students commit a mistake. So please watch out for this. So with this, we have completed this particular question. Well, so now let's move on to the next question on standard costing. Now let's move on to the next question on standard costing. So this question is on material cost variances. Fully all the material cost related variances are given in this question. So let's quickly read the question. So Banco Manufacturing Limited is engaged in producing an item named ABC. It produces ABC in a batch of 100 kgs. The standard material inputs required for 100 kgs of ABC are given as below: A, B and C. So in quantities, 50 kgs of A, 30 kgs of B and 30 kgs of C. This is the standard input for an output of how much? 100 kgs. So if you want to get an output of 100 kgs, right, of ABC product, you are supposed to input 50 kgs of A, 30 kgs of B and 30 kgs of C. Are you clear with this? And the rate per kgs are also given. This is directly, you can take it as standard price. During the month of April 2024, the actual production was 50,000 kgs of ABC, for which the actual quantities of material used for a batch and the prices paid thereof are given below. So what have they given? The actual quantity consumed for A, B and C for an output of 100 kgs is what is given. Are you clear with this? So they have given per batch of 100 kgs of ABC, they have actually consumed 60 kgs of A, 25 kgs of B and 20 kgs of C. Are you clear with this? And then the rate per kgs, the actual price is also given. But be very clear, guys, this is not the actual quantity. No, this is the actual quantity for 100 units of output. How much will it be for 50,000 kgs of output? Very, very simple. 60 divided by 100 into 50,000. So for 25 divided by 100 into 50,000, 20 divided by 100 into 50,000. If you do it, you will get the actual quantities. Are you clear with this? Next, you are required to calculate the following variances from the above information of the month of April. So material cost variance, price variance, usage, mix and yield variance. Fine. Very, very simple. Now, how do we go about with this particular question? The first thing that you need to do is you only need 4 components: standard quantity, standard price, actual quantity, actual price. So now the first thing that we need to do is we need to calculate the standard quantity. Now, how do you calculate the standard quantity? Guys, very, very simple. Very, very simple. So now if you look at this, they have given in the question, for every 100 units of output, you are supposed to consume how many kgs of product A? 50, correct? Then I have actually produced how many kgs? 50,000 kgs of output. So for 50,000 kgs of output, how many kgs of A should have been consumed? 50 divided by 100 into 50,000. Clear? Similarly, for B, it's going to be 30 divided by 100 into 50,000. C is going to be 30 divided by 100 into 50,000. Are you clear with this? This is exactly what they have computed. 50 kgs is the standard kgs of input of A for an output of 100 kgs. For an actual output of 50,000, what is the total kgs of A that you should have inputted? So 25,000 kgs of A, 15,000 kgs of B and 15,000 kgs of C. Are you clear with this? This is the standard quantity of material for the actual output. Are you clear with this? Similarly, what is the actual quantities of material consumed for each of these three particular materials? Look at this. They have given the question. They have actually consumed 60 kgs of A, 25 kgs of B, and 20 kgs of C for an output of 100. But they've actually achieved an output of how much? 50,000. So this is per batch consumption. So how much should be the total? 60 upon 100 into 50,000, 25 upon 100 into 50,000, 20 upon 100 into 50,000. This is exactly what they have done here. They have arrived at the actual quantity also. Are you clear with this, guys? Are you clear with this? This is what they have done. Nice. Fine. So now look at this. I have compiled it and I have put it here. So basically standard quantity is going to be 25,000, 15,000 and 15,000. Actual quantity is going to be how much? 30,000 of A, 12,500 kgs of B and 10,000 kgs of C. Are you clear with this? And the standard price is going to be your 110 rupees, 320 rupees and 460 rupees, and actual price for A, B and C respectively is going to be 115, 330 and 405. These are all given in the question. Are you clear with this? So I have just multiplied these two figures and I have arrived at the standard quantity to standard price, actual quantity to actual price. I have just multiplied it here. Now, come on, tell me the formula. So first they have asked for all the variances. So first let us list out the formula in a branch format. First one. So first, material cost variance. What is the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. Correct, guys? Right? So standard quantity into standard price. Each of these three components, we have arrived at it. Actual quantity into actual price, we have arrived at it here. Now look at this. This is what they have also done. So material cost variance, standard quantity to standard price minus actual quantity to actual price. So for material A, what is the standard material cost? That is standard quantity to standard price, 27,50,000. What is the actual material cost incurred of product material A? 34,50,000. You subtract the two. So 27.5 lakhs minus 34.5 lakh, you get 7 lakh rupees. The actual is more than the standard. It's an adverse variance. Similarly, for product B, the standard material cost is totally how much? 48 lakh, but you've actually incurred only 41.25 lakh. So which means the difference of 6.75 lakh is a favorable variance. Similarly, for C, it's going to be 69 lakhs is the standard material cost of product material C. However, you have actually incurred only 40 lakh 50,000. It means what? There is a difference of 28.5 lakhs. It's a favorable variance. Your actual is less than your standard. So if you add up everything, you get what? 28 lakh 25,000 favorable variance. Are you clear with this? Yes. So now with this can be branched out into two. What and what? Material price variance and material usage variance. So I've taught you the formula for this with the logic. So what is the material price variance formula? It's going to be standard price minus actual price into actual quantity, right? Why actual quantity? Because here the purchase manager is dependent on the production manager and all. We have seen it, right? So for product A, so what is the standard price? Go up, it's 110 rupees. Actual price is how much? 115. So it's going to be 110 minus 115 into what? Actual quantity. What is the actual quantity here? 30,000 kgs into 30,000 kgs, right? Similarly, for product B, how much is that? Standard price is going to be 320, actual price is going to be 330. So 320 minus 330 into actual quantity, how much is that? 12,500. So into 12,500. Similarly, for product C, for material C, I'm sorry, how much is that? 460 is the standard price, 405 is the actual price. 460 minus 405 into what is going to be my actual quantity? Actual quantity is 10,000 kgs, right? So now if you multiply this, you were supposed to incur 110, you have incurred 115. So 5 rupees more you have incurred for each of the 30,000 kgs. How much is that? 1,50,000 rupees of adverse variance, correct? 1,50,000 adverse variance. Similarly, you are supposed to incur 320 for B, but you have actually incurred how much? 330, 10 rupees more on each of the 12,500 kgs. It's going to be how much? 125,000 and 0. So it's going to be how much? 1,25,000 once again adverse. Whereas for product C, we are allowed to incur how much? We are allowed to incur 460 rupees, while you've ended up incurring only rupees 405. It's going to be 55 rupees you've saved on each of the 10,000 units. It's going to be 5,50,000 rupees of favorable variance. Are you clear with this? The net of these three, how much you get? So you get 1,50,000 plus 125 minus 5,50,000. The net of it's going to be 2,75,000. Going to be favorable variance. Are you clear with this? This is the total of material price variance. So look at this. Material price variance is going to be 2,75,000 favorable, and how they have arrived at it: 1,50,000 adverse, 125 adverse, and 5,50,000 favorable. Are you clear with this? Right. Next one, material usage variance. On the other hand, how will you arrive at material usage variance? One second. So material usage variance, it's going to be, what is the formula for calculating material usage variance? So I'm pulling it down here. The material usage variance is standard quantity minus actual quantity into standard price. Are you clear with this? Right? So standard quantity minus actual quantity into standard price. So I'm just pulling it down here and writing. So material usage variance is going to be standard quantity minus actual quantity into standard price. So for product A, B, and C respectively. So what are the figures? One second. So what are the figures here? So standard quantity, how much is the total standard quantity? 25,000. Actual quantity 30,000. So here it's going to be 25,000 kgs minus 30,000 kgs into standard price is how much? Standard price comes out to 110 rupees, right? So into 110. Similarly, for material B, it's going to be how much? 15,000 and 12,500. So 15,000 minus 12,500 into what's going to be the standard price? The standard price is going to be 320 rupees, right? And similarly, for material C, it's going to be how much? It's going to be 15,000 and 10,000 here. So 15,000 minus 10,000 into what's going to be the standard price? The standard price is 460. 400, right? So for material A, how much is it? You should have consumed only 25,000 kgs. You've actually consumed 30,000. You've consumed 5,000 kgs more. 5,000 into 110. How much is that? It's going to be rupees 5,50,000. And that's going to be an obviously adverse variance. For product B, you should have consumed 15,000, but you have only consumed 12,500. So you have consumed 2,500 kgs less, and each kg has a cost of 320 rupees. It's going to be 8 lakh rupees favorable. 8 lakh rupees favorable. And then here for C, you were allowed to consume how many kgs? 15,000 kgs. You've only consumed 10,000 kgs. You've saved 5,000 kgs for the company, and each kg was costing rupees 460. It's going to be rupees 23 lakh favorable, right? So if you net off these three figures, how much you get? So 23 plus 8, that's going to be 31. 31 minus 5.5 gives you how much? 25 lakh 50,000 rupees of net favorable material usage. Look at this, 25 lakh 50,000. Exactly what we've got. Breakup is 5.5 lakh adverse, 8 lakh favorable, and 23 lakh favorable. Are you clear with this? Right? So with that, the material usage variance is also done. Guys, very simple. Provided you have this, you have the ingredients sorted out like this, you can directly pick it. I didn't even go back to the question. I only pick the figures from here. Are you clear with this? This is the way to crack standard costing. This is pretty much a straightforward sum, but it's a comprehensive question. It has all the variances here. In fact, it's a super way to revise, a very good way to revise the entire concept of material cost variances. Fine. Now, finally, you have what? Two other variances, material mix and material yield variance, right? Material mix and material yield variance. So material usage variance, the formula we just saw is standard quantity minus actual quantity into standard price, right? This gets bifurcated into two ingredients, what and what? Material mix variance, material yield variance. Material mix variance, what is the formula? Revised standard quantity minus revised standard quantity minus actual quantity into standard price. Ideally, in the classroom, I told you this is not standard quantity, the revised standard quantity. The right way of calling it is revised actual quantity. Because what are we doing? We are revising the actual quantity for the standard mix. Hence, it should be called as revised actual quantity, because actual quantity is only getting revised here. So, the yield variance is ideally the balancing figure. What is it? Standard quantity minus revised standard quantity into standard price. Are you clear with this? Very simple. So now here let's do this mix variance. So now, how do we go about with this? I told you, prepare the columns and all. Revise the standard quantity, actual quantity, standard price, and then material mix variance. Now, three products here, A, B, and C, right? Now, first, what you need to do, you need to fill in the actual quantity column. How much is the actual quantity? 30,000, 12,500, and 10,000. So 30,000, 12,500, and 10,000, right? So 30,000, 12,500, 10,000. Add up 30,000 plus 12,500 plus 10,000. You get how much? You get a total of 52,500. You get a total of 52,500. Now, what you need to do? You need to go to the revised standard quantity column, put this 52,500, and this 52,500 should have been in the standard mix. What is the standard mix? Go refer the question. What have they given in the question? Ideally, the standard mix that I should have maintained was what? 5:3:3. Correct? 5:3:3 should have been the standard mix. So this should have been in the ratio of 5:3:3. Right? So 5 plus 3 plus 3 is going to be 11. Right? So 52,500 divided by 11 into, so into 5 is equal to, that's going to be 23,863.67. I'm rounding it off here, but the decimals need to be retained fully. Then the 3 is equal to, that's going to be 14,318.18. Similarly, here it's going to be 14,318.18. So what we are doing is the actual quantity. What we are doing is we are distributing it in the standard mix. Are you clear with this? This is exactly what we are doing. And then the standard price is already given in the question as 110, then 320, and then 460. Now, guys, if you look at it, ideally speaking, this is how revised standard quantity, this is how it needs to be, arrived at. But if you look at our institute solution, what they have done is, look at this, the same thing they have done. 5 divided by 11 into 52,500. This 52,500 is being apportioned in the ratio of 5:3:3. Exactly what we have done. That is what they have also done. But if you do the calculation, 50 divided by 110 into 52,500, if you do, how much it comes out to? It comes out to 23,863.63 something. This is exactly what we have arrived. But Institute has comfortably rounded it off to 23,860. Strictly speaking, this is not the way to do it. However, since it has been done in your RTP, I am also following it. That is the reason why I was thinking whether there was some calculation error. What they have done is Institute has rounded it off. They have rounded it off to the nearest 100. Fine. They rounded off to the nearest tens. So is it right or wrong? But I'm not getting into that. Very strictly speaking, you need to read in the decimals and do. But since it has been done like this by ICAI, what I am doing is I am also sticking to what they have done it. So they have taken it as 23,860. So 23,860. And these two figures, they are taking it as 14,320 respectively. 14,320. But ideally speaking, this 52,500, if you apportion it in the ratio of 5:3:3, right, it comes into decimals. They have rounded it off to the nearest 10th digit. Clear with this, guys? So with this, but make sure that if you add up everything, it comes out to 23,860 plus 14,320 plus 14,320. It comes out to how much? 52,500. Are you clear with this? So now we can calculate the material mix variance. Ideally, you should have consumed 23,860. You've consumed how much? 30,000. So 23,860 minus 30,000. You've consumed more by 6,140 into 110. It comes how much? 6,75,400. That's going to be your adverse variance. Similarly here, you should have consumed 14,320. You have only consumed 12,500. It's a favorable variance. 14,320 minus 12,500 into 320. It's going to be how much, guys? It's going to be 582,400. That's a favorable variance, right? And then 14,320 minus 10,000. It's going to be 4,320. So that's going to be what? A favorable variance once again into 460. It's going to be how much? 19,87,200. Once again, here also it's going to be a favorable variance. this plus 582,400 minus 675,400, that gives you a total of 18,94,200 of favorable variance. Hope the answer matches what they have arrived. Yes, 18,94,200, right? So the way they have arrived at is 695,400 adverse, 695,400 adverse. For B, it's 582,400 favorable, 582,400 favorable, and here it's 1987. Are you clear with this? So one thing that they have done is they have rounded off the revised standard quantity figures alone. They have rounded it off the nearest 10th digit, right? Which means institute is accepting. In most of the sums, they don't do that, right? This sum alone, it's unique. It is coming as a surprise for me as well. So they have done it like that. So I have also done it in a very similar way. And then obviously the final part of material yield variance, the similar thing you need to do. So standard quantity minus revised standard quantity into standard price. So here it's going to be the standard quantity. The figures are already there. The standard quantity figures, we already have it here. So this column you need to take minus revised standard quantity. So revised standard quantity we just arrived at into standard price. If you do it again, it's just an application of formula. You will arrive at 6,55,800 favorable variance. Are you clear with this? Fine. It is just a matter of plugging in the figures. Now the most important thing in this question is what? It is first about calculating the standard quantity and the actual quantity, because per batch detail is given. You need to convert it for the total actual output. How much should have been the kgs of raw material that I should have consumed? That's called as standard quantity. And how many kgs were actually consumed? That is called as the actual quantity. So first what you need to do is you need to come up with this particular table of standard quantity, standard price, actual quantity, actual price. With that, you can calculate the material cost variance, material usage, and material price variance. These three variances you can arrive at. And further, for material usage variance, you need what? The concept of revised standard quantity and all. So for that is further bifurcated into two: mix and yield variance. The mix variance is going to be revised standard quantity minus actual quantity into standard price, and the balancing figure is your yield variance, that is standard quantity minus revised standard quantity into standard price. Now in this case, what they have done, how do you calculate the revised standard quantity? You first fill in the actual quantity column. This you put it here. This actual quantity should have been the standard mix. What is the standard mix? 5:3:3. So if you apportion it, ideally this runs into decimals, but in the RTP they have rounded it off to the nearest 10th digit. So hence I am also solving it like this. Sir, I want to retain the decimals and do it. Will the institute give me mark? Absolutely, they will give you. But be clear on one thing: if you add up A plus B plus C, the total should be equal to 52. You clear with this? And with that, this entire question on standard costing is also done. Now let's move on to the next question. And this question is on marginal costing. Guys, mark this sum as important, extremely important, because this question is coming from a concept that is ideally a part of your CA final, your self-paced online modules. Concept is called as relevant costing. Relevant costing, it is actually a subset of marginal costing. This concept is not there in your CA inter-study material, but they have asked this in your RTP. So you can definitely not say it's out of syllabus. An extremely important concept where we will be breaking all the rules, and we'll be saying they would have asked to arrive at a particular quotation. We will be seeing what it is. Oh, sir, relevant costing, it is ideally a subset of marginal costing, which we use in case of something called as a distress sale. Now, what is it? I'll give you one very standard example, which you guys can relate. Now, if you just go to a flower vendor, right? So flower is basically a very perishable product, right? If you go to a flower vendor, in the morning, if you go, they will charge, let us say for 100 grams of flour, right? Example I'm giving you, they will be charging you 100 rupees for 100, or let's say 1 kg of flour, they will be charging you 100 rupees. Example I'm giving you. Now, if you go to the same flower vendor, maybe in the afternoon, more or less it will be the same. In the evening, prime time, it will be the same, or in fact, it will also be more than that, 120, 150 also they will sell it. Let us assume that for the flower vendor, they had purchased it at 80 rupees. In the morning, they went to the market, right? Wholesale market, per kg, they purchased it at 80 rupees. and they are selling it at 100 rupees throughout the day. Prime time they will increase and all, leave that. Now, same flower vendor, you go at the night, right? Just before they close the shop. Now, flower is a perishable commodity. Now, for them, they cannot store it, right? I'm not talking about some giant supermarkets and all. Roadside vendors, they cannot store it. Now, what they will do, the same 80 rupees flower, they will be ready to sell it to you even at 30 rupees or 40 rupees. Sir, how, sir, it's a loss? There they will not compare this 80 rupees and all. Now, suppose if you are if they are still quoting 100 rupees, you are not ready to buy, what will they do? The entire, whatever stock they have, they need to throw it away. Instead, what they will do, at least let me try to recover something in order to mitigate my loss. This is what they will think. Now, for them to sell it to you at 30 rupees, they would not have said, oh my God, I purchased it at 80 rupees. Now, how can I sell it at how can I sell it at 30 and all? They will not think, because at this point of time, it's a distress sale. It's not a normal situation. At the end of the day, when they're trying to close their particular business for the day, and given the fact that they can't stock, it's a very it's a very unique situation that they are put into. Here, whatever cost that they have actually incurred till now is irrelevant for the decision making. Freshly, they will think, okay, fine, at least this guy is ready to pay me 30 rupees. If I lose this customer, I will lose even the 30 rupees, because anyways, it's going to be a loss only for me. I can't carry it forward the next day. Are you clear with this? Now, in this kind of situation, the concept of relevant costing comes into picture. At that time, whatever is relevant, that alone needs to be taken into consideration for the purpose of arriving at a decision. Are you clear with this? And one of the most important concept in relevant costing is that sunk cost. Whatever cost you have already incurred is absolutely irrelevant for your decision making. Are you clear with this? This does not happen in the routine course of organization, right? In all your marginal cost, you will be saying like routine course, it will be there. But in a case of extreme situation, distress sale, as they call it, that is when we use the concept of relevant costing. Now, in this context, with this background, you read this sum, you will be at least able to appreciate it much better, because without all this background, you can never understand this. This is a concept of relevant costing. Now, let's get started here. XYZ Limited is a company involved in production and construction specialized equipments and machines on demand of customers. So a customer comes to them and asks them to build a machine for them. Accordingly, they build. Clear with this? The company received an order for construction of a specialized machine, and it had nearly completed this job relating to construction of the machine when it discovered that the customer had gone out of business. Means what? Customer gave them an order to construct a machine. They are almost completed. The machine work is almost completed. And at this time, they realize that this customer is run out of business. Means what? To him, he cannot further sell, right? There is one job in hand. That job is almost complete, but on the verge of completion, they tend to realize that this job is gone, right? This is a situation. At this stage, the position of the job was as under. Now, originally, they estimated that the overall cost is going to be how much? 27,50,000. It's all estimate, right? Till date, they have incurred an actual cost of how much? 24,80,000. And on date, they know further that they need to further incur 3,70,000 to complete the job. Now, don't say, sir, 27,50,000 minus 24,80,000. How much is it? Sir, it's 2,70,000 only. How does 3,70,000 came? Is that a mistake? No. This was an estimate they made at the beginning, right? Today, the day when they realize that this guy is run out, the customer is run out of business, which means he's not going to buy from them. As on date, they see they have incurred 24,80,000, and as on date, one fresh estimate was made, and they are saying that further 3,70,000 needs to be incurred to complete this project. Are you clear with this? This is what they are saying. Next, as on date, they have received a total of 15,50,000 rupees from the original customer, the customer who is run out of business, right? These are the data given. Now, after searches, a new customer for the machine has been found, right? He is interested to take the machine if certain modifications are carried out. That guy is saying, so it's a distress sale. Again and again, I'm saying it's not a normal course of operation, right? Not a fresh order and all. You have made one order for someone, that guy in between is run away. Now with this, what are you trying to do? You are trying to search for some customers who are ready to buy it from you. Look, this is the background. Remember, that flower vendor, at night you're going and buying, he or she is looking for some person to come and buy. At this point of time, they will not do a normal cost analysis and they will say, no, I've incurred so much and all, you should pay me so much. No, whatever best possible outcome that I will be getting out of this particular quote, I will be taking it. Are you clear with this? Come to this background and read this question, else it will be very difficult. Now, the new customer wanted the machine in its original condition. Means what? You further incur the 3,70,000, right? Make the original machine. Now, from here, right, they are saying, but without its AI device and with certain modification. They are saying you make the original machine. Now, from this, you start some AI device, you remove that, and certain modifications I want, you make that and all and give it to me as a customized product. Are you clear with this? The costs of these additions and modifications are estimated as under. First, direct materials at cost, it's given as 1,05,000, right? Now, direct wages in department X 35 men days, department Y 55 men days. Are you clear with this? Variable overheads 30% of the direct wages in each of the department. Delivery cost 15,500. These are the costs I will have to incur for what? These are the costs I will have to incur for this new guy who is ready to accept this machine with some modification. Are you clear with this? Now, fixed overheads will be absorbed at 50% of direct wages in department. Now you tell me, for the purpose of this decision, right, whether to sell him or not, is this relevant? Absolutely not. Absorption, fixed overheads, absorption and all is not required, right? Because whether I go for this order or not, anyways it will be incurred. It is not specific to this particular decision making, hence I will ignore it. Next, the following additional information is available. Now guys, this is where the question becomes very interesting. This is where the core concept of relevant costing comes in. In fact, even I am surprised to see this sum in your CA intermediate level, but nevertheless, let us get started. First, the direct materials required for modification are in stock. And if it is not used for modification of this order, they will be used in another job in place of the materials that will now cost 1,50,000. Very important part. This is, I'm telling you 100%, if you don't listen now, it will be very difficult for you, because this is not something that we've seen at the intermediate level, even in our regular classes. Why? In the institute publication itself, this material, this kind of question was not at all there. The first time I'm seeing it in any RTP for that matter. This is the first time I'm seeing it, the intermediate level. Be very clear about this. What has happened? Now, if I am going for this modification that the new customer has asked me, I need to use some materials, correct? Now, what they are saying, the cost of the direct material is how much? 1,05,000. Now, read this very carefully. The direct materials required for this modification are already in stock. Meaning what? This 1,05,000 rupees, at some point of time in the past, I purchased and kept it. It is already there in the stock. Are you clear with this? It is not a cost I need to now incur and buy. It was already incurred. Fine. It's a sunk cost. It is irrelevant for decision making, right? But now read it further. What they are saying. If I don't use this for this particular modification, the new customer, they are saying the same material will be used for another job, correct? So if I don't use it now, the same material could have been used for another job. But what am I doing? I am using it. Now what they are saying, so for another job, if I have to buy it today, now it will cost 1,50,000 rupees for me. The same material, if I were to buy it today, it will cost me 1,50,000. Are you clear with this? So now what I need to do, because I am using the material for this job, I am not able to use it for another job. So for this another job, today I will have to buy the same stock at 1,50,000 rupees and use it. So because I am going for this particular order, extra cost I'm incurring is 1,50,000. It may not be for this job, but incidentally, because I'm going for this job order, I am incurring 1,50,000 rupees on another job. Hence, the relevant cost of direct material that needs to be considered here is not 1,05,000, it is 1,50,000. Are you clear with this? We call this as a replacement value. Are you clear with this, guys? Now, this is not something that we normally do in marginal costing. I am telling you, this is in a case of a distress sale. Are you clear with this? Hence, this only will be considered. Next, Department X is working normally and hence any engagement in labor will have to be paid at a direct wage rate of 1000 rupees per man day. Perfect, right? So for me to make these modifications, I need 35 man days in what? In department X. So 35 into 1000 I will have to incur. But department Y is extremely busy. The direct wage rate is 1200 rupees per man day. Anyways, I will have to incur. How many men days are required? 55 men days. 55 into 1200 I need to incur. But what they are doing, it's a completely busy, extremely busy department. Means what? It is working at full capacity. So 55 men days I am taking from department Y and I am using it for this particular order. What happens? Because of this, all my staff are busy in department Y. There is no idle labor, which means what? I will have to take a laborer who is working on some other project. I am taking it from that other order and I am putting it in this particular job order. Are you clear with this? So because I'm doing that, what happens? I am not only incurring extra labor cost, but I am also losing out 3 rupees of contribution for per rupee of direct wages. Are you clear with this? For every rupee of direct wages I am taking from department Y, I am losing 3 rupees of contribution because of that. Why? Because this guy was working on some other job order. That's why they have given it's extremely busy, right? Since I am taking it from another job order and giving it here, I'm not only incurring the labor cost, I am also losing out on the contribution that I could have generated using the same labor from a different job order. Are you clear with this? This is of opportunity cost. See what are all the intricacies coming here. Next, additional supervisory cost required for modification is going to be 80,000. Then the cost of AI device that the new customer does not require. So the customer says, so I have now built this entire machine, but including AI. But this guy says, you remove the AI, I don't want AI device. So the cost of AI device that the customer does not require is 1,35,000. Correct? If it is taken out, it can be used in another job in place of the different mechanism. The latter mechanism has otherwise to be bought for 1,05,000. The dismantling and removal of control mechanism will take 5 man days in department X. We will see this adjustment in detail while solving the solution. Next, if the conversion is not carried out, some of the materials, which means what? If you are, because now I found a new customer, he is asking for some modifications and all. Suppose this new customer has not come, what will I do? Whatever I have built till now, I will try to dispose it off. That's what they are saying. If the conversion is not carried out, some of the materials in the original machine can be used in another contract in place of the materials that would have cost rupees 2 lakh rupees. It would have taken 5 men days of work in department X to make them suitable for this purpose, and the remaining materials will realize 1,50,000 as scrap. The drawings which are included as a part of the job can be sold for rupees 45,000. So all these are what I would have, these are the savings that I would have made had I not carried out this conversion process. Are you clear with this? These will go on to reduce your cost. We will see what it is. You are required to calculate the minimum price which the company can afford to quote for the new customer as stated above. So what they are saying, given the situation, what you need to quote the bare minimum price that you need to quote to this particular new guy. Are you clear with this? Now what has happened? I have already manufactured, I'm in the process of already doing this job. I have incurred a cost of 24,80,000. Now, can I recover this 24,80,000? It's a sunk cost. It's incurred. That's about it. Nothing can be done. Are you clear with this? Now, what we need to do is, because I am going for this modification and selling it to this customer, what are all the incremental costs that I will be incurring, right? Any benefits thereon needs to be adjusted against the cost. Net total cost, how much I will be incurring that I need to quote to this new guy is what we need to be seeing in this, what we need to calculate in this particular question. Are you clear with this? A brilliant, beautiful sum from a CA final level concept. Now let us just do this particular question. Now, what happens? The first thing that you need to do right now is what? The statement of minimum price which the company can afford to quote for the new customer. Now, what you need to do first, till now I have incurred what? 24,80,000. Is it relevant? It's an irrelevant cost. Why I have already incurred? That's about it. Now, what have they said? Cost to be incurred further 3,70,000. So first I need to bring the machine to the original condition and then do the modifications. What are the modifications? Some extra fittings they are asking, and AI tool alone I need to remove and all. They have said no. Correct. So now what we need to do first, the cost to be incurred from today onwards, whatever is the incremental cost, incremental benefits, that alone needs to be adjusted, and the net total cost I need to arrive at, right? Past is past. I cannot take that into consideration. Now, cost to be incurred to bring the machine to its current, to its original condition. How much is that? 3,70,000. Fine. Next. Now, they have said that in the question it is given, for us to carry out the modification, some direct material cost to be incurred. How much is that? That material is already in stock, and whenever I purchased earlier, sometime back, I purchased it at 1,05,000 rupees. Now you tell me, we are in a distress sale, relevant costing comes into picture, sunk cost should be excluded. However, because I am using the stock for this particular job order, what I am doing is I am not able to use the same stock for another order. Hence, I need to purchase a fresh stock by paying 1,50,000 rupees today, right? And hence, the relevant material cost for this particular job order should be taken as 1,50,000. Are you clear? Only because I'm going for this job, I'm using the stock. Since I am using the stock for this particular job, I need to purchase fresh stock today for a different job order that I need to get by paying 1,50,000. Are you clear with this? This is extremely important, very unique adjustment that is applicable only in case of relevant costing scenario. Next, what have they said? Direct wages, right? In department X, 35 man days, right? Every man day in department X you'll be paying how much? 1,000 rupees. 35 into 1,000, 35,000. In department Y, it's going to be 55 man days, 55 into 1,200, it's going to be 66,000. Plus. We know that department Y is an extremely busy department, right? And what have they said? For every rupee of direct labor that I am for every rupee of direct labor in department Y, I will be losing 3 rupees of contribution, right? So because I am going for this project, I need to use the services of department Y labor that is going to cost me 66,000, and because of this I am losing out on contribution. How much is that? 66,000 into 3. That is also one more cost, opportunity cost for me. So because I am going for this order, I am not only incurring the 66,000 rupees in department Y, I am losing out on contribution to the extent of how much? 1,98,000. So 35,000 plus 66,000 plus 1,98,000, that comes out to how much? 2,99,000. That is going to be the total relevant wage cost. Are you clear with this? Be very, very clear. It's a very unique situation. Next, obviously variable overheads are given as 30% of direct wages. So what you can do is 0.3 into 35,000. That gives you how much? 0.3 into 35,000 plus 66,000, right, on direct wages. So how much is that going to be? 30,300. That is also sorted. Then delivery cost, it's given in the question, 15,500. Because I'm going for this job order only, I'm incurring this delivery cost. I can add it up here. Next. There's one more thing given here, additional supervisory costs that I'm supposed to incur, 80,000 rupees. Once again, that's an incremental cost that I incur only because I'm going for this order. That should also be considered, add to the cost. The next one. Now, let's go to the paragraph that talks about what? That talks about your this one. That talks about your AI device. Now, let's see what it says. Now, yes. Now, AI device. Now, I have already built this machine using this AI device. Now, this customer is saying, I don't want AI device. You remove it. I don't want it. Now, what they are saying? The cost of AI device that the new customer does not require is 1,35,000, which means what? 1,35,000 is a cost that I have already incurred to manufacture this AI device. That is irrelevant. What they are saying. If it is taken out, it can be used in another job in place of a different mechanism. And that other job, whatever mechanism that it uses, right, it needs to be bought at a cost of how much? 1,05,000. So means what? Since this customer does not want the AI device, I am taking it from here and using it on another job. Because of this, I am able to save how much? 1,05,000 rupees. Are you clear with this? So technically speaking, because of this, I am able to save 1,05,000 rupees. So this needs to go on to reduce your overall cost. Correct or not? Because this guy doesn't want the AI device. Are you clear with this? So that can be used for another project that is going to save my cost by 1,05,000. But wait, for me to remove this, I will be incurring some cost, that is what they are saying. The dismantling and removal of control mechanism will take 5 man days in department X. So department X, what they are saying, department X, every man day will cost me how much? 1000 rupees. So 5 into 1000, I will be incurring how much? 5000 rupees. So for me to get the benefit of 1,05,000, I need to spend 5000. But wait. One more thing you should remember. Whenever you are incurring wages, you will also incur variable overheads. 30% of direct wages is going to be my overhead, is going to be my variable overheads. So 5000 into 0.3 minus further 1500 rupees. So how much is that going to be? That's going to be 1,05,000 minus 5000 minus 1500. So net of you are saving how much? 98,500 rupees. It should go to reduce your cost, because we are calculating what the net total cost I will be incurring. That is the minimum price that I need to quote to the new customer. Are you clear with this? So if I take this AI device out, I will be able to save 1,05,000. But for me to do that, I will be incurring a labor cost of 5,000 and I'll be incurring a variable overhead cost of 1,500. So net off, if you see, the net savings is going to be how much? 98,500 rupees. Are you clear with this? That is what they have given here. This will go on to reduce your cost. So 1,05,000 minus 5,000 minus 1,500, it's going to be 98,500. Are you clear? Fine. The next point that is being asked here. Yes. Now, so all this while, what we have done, we have calculated whatever is the incremental cost we have. We are going to incur incremental benefit and all we reduce. Now, one more thing they are saying. If the conversion is not carried out, which means what? If the new guy has not come, which means semi-finished job for the old customer is already there. Suppose I didn't convert it and I'm not selling it to him. What I will do? Whatever I have till now, I will be trying to dismantle and use it somewhere. What they are saying is, if the conversion was not carried out, some of the materials in the original machine can be used in another contract in place of the materials that would have costed how much? 2 lakh rupees. Correct? But because I am selling to this guy, now what I need to do, I am not able to save this 2 lakh rupees. So this 2 lakh rupees is an incremental cost for me. You clear with this? Had I not used it for this particular customer, whatever materials I had right now, I would have used it for another project that would have saved me 2 lakh. But now I'm not able to save the 2 lakh. That is the relevant cost here. I did an opportunity, right? But they're also saying it would have taken 5 men days of work in department X to make them suitable for this purpose. Are you clear with this? And the remaining materials will realize 1,50,000 rupees as scrap, and the drawings will realize 45,000. So now what they have done here, you look at this. Now what they have done here. So yes, you look at this net material. So look at this. This is what they are saying. Had I not used this, or had I not converted this as per the requirements of the new customer, what I would have done, I would have used it for some other project, and there I would have saved material cost of how much? 2 lakh rupees. So ideally speaking, this 2 lakh rupees is going to be an extra cost for me, right? Basically, I could have saved 2 lakhs, right? But you would not have saved 2 full lakhs. Why? For you to do that, you should have used the manpower requirement in your department X. So 5 men days would have been required at the rate of 1,000 rupees. So you would have incurred extra 1,000 rupees, 5,000 rupees, right, on that variable cost of 1,500 rupees. So basically what they are saying is, for you to get this benefit of 2 lakhs, you would have incurred 5,000 and 1,500. The net benefit that you would have got had you not used this for this particular customer is only how much? 1,93,500. So this is actually an opportunity cost. So had I not so gone for this particular order, I would have saved a net amount of 1,93,500. But because I am going for this order, I am not able to save that, and hence this should be added to your cost. Are you clear with this? Right? Because I'm going for the order, I am not able to save this figure, and hence it's a loss on the material cost savings. Are you clear? I'm not able to save. Earlier it was a savings, that's why we reduced. Here the savings is not being able to made, and hence we are adding it to the cost. Are you clear with this, guys? It's very tricky. Be very careful here. Are you clear with this? Fine. And then one more thing they are saying. So regarding the other materials, they would have scrapped it for 1,50,000, but since they are taking up this order, they are not able to scrap it. So opportunity cost of the scrap that they could have realized is going to be 1,50,000, and the drawings also they could have realized 45,000, but now they are not able to realize. Why? Because they are converting it and they are selling it to this particular guy. So that is also lost. Are you clear with this? Basically, if you add up all these things, the total relevant cost that they are incurring because they are trying to undertake this new contract is going to be 12,34,800. So if this guy, if the new guy is willing to pay at least 12,34,800, I will be okay with it. If he is saying, no, I will not pay this much, I will only pay less than that, you can say that rather I will not take up anything. So let it be that whatever is the material or whatever is the thing that is in that is inside the existing semi-finished job that you try to dispose of and leave it. Or in other words, in this case we have used only the relevant cost. Because I am going to undertake this new order, which is a slight customization of whatever I have incompleted job that is already there. Now, because I'm going to take up the new order, I need to consider only the relevant costing here. Are you clear with this? And that is how we have solved this particular question. Mark my words, guys. This is a very, very unique sum, a CA final level concept. Without the background, it is not, you will not be able to appreciate it. So please mark this sum as important. It's a very, very unique sum, right? Fine. So with that, we have completed this particular question on marginal costing. Watch out for the sum. I am expecting this sum either in your Jan 25 or in your May 25 attempt. But because this is a unique sum, you cannot say that it's not a... Sorry guys, there was a power cut. So you cannot say that it's not a part of your syllabus since it is a part, since it has been given in your RTP. So you can never say that. So please watch out for the sum. It's a very unique sum. Mark this as important and definitely revise this the day before your exam. Now let's go on to the next question. It is on budgets. So this question is a fairly simple question on flexible budget. So let me quickly read out the question for you. PT Limited achieves a sale of rupees 73,12,500 with a COGS of 40% while operating at 75% of its normal capacity during the current financial year. The information relating to admin, selling and distribution costs is given below. Admin costs, office salary. So under admin costs, there are different line items of expenses. Office salary is 11,70,000. General expenses is 5% of COGS. Depreciation is 97,500. Rates and taxes is 1,13,750. Similarly, for selling costs, it's going to be 8%. Salaries is 8% of sales. Traveling expenses 5% of COGS. Sales office expenses is 2.5% of COGS. General expenses is 2.5% of COGS. Similarly, distribution cost, wages 1,95,000. Rent 1% on sales. And other expenses is going to be 10% on COGS. Considering some of the expenses like office salaries, depreciation, rates and taxes, and wages to remain the same irrespective of the level of activity, as these expenses are fixed in nature, prepare a flexible admin and selling distribution cost budget alone, operating at 85, 100 and 115% capacity. So basically what they have mentioned, so this is a fixed cost, the office salary, depreciation is also a fixed cost, rates and taxes is fixed cost, and wages is fixed cost. The remaining components of costs are either a percentage of COGS or a percentage of sales. Are you clear with this? Now, what we need to do, very, very simple. We need to prepare a flexible budget. What budget? Admin and selling overhead cost budget alone we need to prepare at 85%, 100% and 115% capacity level. Right now we are operating at 75% capacity level. Now, what you need to do, so currently it's 75% capacity level. They have asked for 3 other capacity levels. What are they? 85%, no? So 85%, 100% and 115%, right? So 4 capacity levels. Out of this, 1 is given, right? Now what you need to do, you need to arrive at the sales figure. Sales figure for this is given, right? For the other 3 levels, you can easily find out. So 73,12,500, if that is for 75, how much is it going to be for 85%, 100% and 115%, right? So 73,12,500 divided by 75 into 85, you get this figure, into 100, you get this figure, into 115, you get this figure, right? Then you need to also have COGS. Why? Because some components of these expenses are a percentage of COGS, right? COGS is what? 40% on the respective sales figure. So 0.4 into the respective sales figure, this also you will get, right? You freeze these 2 figures, and then what you do, the remaining parts and all, you just need to write exclusive line item. For example, office salary, it's fixed at 11,70,000. It's going to be 11.7 lakhs for all the 4 levels of output. Are you clear with this? Whereas general expenses, what you need is 5% of COGS. So your level wise COGS is available. just apply 5% on the respective levels COGS, you will arrive at these figures. Now, salary, salesman salary, it's 8% on sales. Apply 8% on the respective sales figure, you will arrive at this. As simple as that, nothing great at all. Let me just quickly walk you through the solution. So now, so for 4 activity levels, out of this, the first one is given. The other 3 are the ones asked in the question. Sales is currently given as what? 73,12,500. So for 85% capacity level, how much is that going to be? 12,500 divided by 75 into 85, you get 82,87,500. Similarly, for 100% capacity level, it's going to be 73,12,500 upon 75 into 100 and into 115 respectively. You will get these two figures. Then COGS is going to be 40% on the respective sales figure. You apply 0.4 on the respective sales figure. COGS also you will be getting. Now these two figures you have it with you. Why? Because some line items of admin and selling cost are a percentage on sales, some line items are as a percentage on COGS, some line items are fixed, that is directly given. As simple as that. Now admin cost, the first one, office salaries, it's fixed at 11,70,000. So irrespective of your output level, it's going to be 11.7 lakhs. Now general expense is going to be 5% on COGS. So 5% on the respective COGS you apply, you will get these figures. As simple as that, guys. Calculation and all you can do, it's very, very simple. Similarly, depreciation, it's fixed at 97,500. It's going to remain the same. Rent and rates, it's going to be fixed at 1,13,750. It's once again going to be the same, right? And that gives you the total of admin expenses. Similarly, for selling cost, it's going to be, for the first component, salaries is 8% on the respective sales. So you pick the respective sales figure, apply 8% on that, you will arrive at what? The selling cost to salary. Similarly, for traveling cost, it's going to be what? 5% on COGS, respective COGS, multiply 5%, you'll get these figures. Sales office expenses, 2.5% on COGS, you apply that, you will get these figures. General expenses, once again, 2.5% on COGS, you multiply with the respective COGS, you get these figures. So now you add up all the selling costs, you get the total selling expenses. Now, I think distribution costs are also given. Yes, distribution costs, the wages in the distribution department, it is fixed at 1,95,000, right? Don't think, sir, wages, how can it be fixed? This is wages, these are wages in the distribution cost. These are not wages in the factory. That will move in proportion to your output. They are giving this as wages in your selling and distribution area. So it could be your your delivery van driver's salary or wages and all that. That is what is given here. It's fixed. Next, rent is given as 1% on sales. Respective sales, multiply 1%, you will get these figures. Then other expenses, 10% on COGS, multiply 10% on the respective COGS, you'll get these figures as well. So finally, you get the total distribution cost, A plus B plus C, you'll get the total respective cost. Are you clear with this? As simple as that. So with that, we have finished this question. It's a fairly simple question on flexible budgets. So now that's about all the numerical problems. Finally, they have given one theory question. So discuss the advantages on marginal costing, list down certain financial expenses and income included in financial accounts only, and treatment of byproducts in joint products and byproducts, and then discuss the normal and abnormal process losses and enumerate the treatment in cost accounts. These are all direct. You can just go through the the suggested answers given here. You can just quickly go through it once. These are pretty much straightforward, nothing great in discussing. So that's about this RTP discussion of Jan 2025 attempt. Now guys, overall, in my view, this Jan 2025 attempts RTP was decent, right? It is not much of difficult and all that, except for that marginal costing sum. Please watch out for that question that dealt with relevant costing. That is something that is not there in your study material, but they have asked it in RTP. Please watch out for this, especially if you're a student appearing for Jan 25 attempt or in your May 25 attempt. Please watch out for this particular question, right? And even in the first case study, it was a blend of both marginal costing and absorption costing and all that, right? So overall, in terms of coverage, it gives a beautiful coverage because we have covered literally every single chapter. Maybe not all the concepts, but overall, if you see, the coverage was decent, and especially that marginal costing sum, please watch out for that, right? So with that, I'm concluding this video. So I hope you found this video very useful, and please do revise your RTP before attempting your exam. It is a must, right? And the day before your exam, please revisit that marginal costing question, right? So on that note, I'm signing off in this video. I will see you all in the next one. Thank you all so much. Bye bye.